Conclave is Risk, Reward, and Resilience, building competencies across finance domains. This event is an opportunity to gain insights from industry leaders, explore financial trends, and develop competencies in the dynamic world of finance. Before we begin today's event, I request everyone to kindly rise for national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उज्जल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Good morning, ladies and gentlemen. As we gather today for Finance Conclave 2025, organized by Finance Club of Balaji Institute of International Business, Sri Balaji University, Pune, we seek blessings of the Almighty for successful and enlightening event. To mark the auspicious beginning of our event, let us invoke the blessing of knowledge and wisdom by lighting the ceremonial lamp.
Now, I request our esteemed dignitaries to kindly step forward for the lighting of the lamp, followed by floral tribute to Dr. Colonel A. Balasubramanian Sir, Founder Chancellor, Sri Balaji University, Pune.
गणदैवताय गणाध्यक्षाय धीमहि गुणशरीराय गुणमण्डिताय गुणेशानाय धीमहि गुणातीताय गुणाधीशाय गुणप्रविष्टाय धीमहि एकदन्ताय वक्रतुण्डाय गौरीतनयाय धीमहि
Honored dignitaries, distinguished guests, and cherished student managers, we are delighted to have you with us today. With global markets experiencing economic uncertainties, technological disruptions, and evolving regulatory frameworks, finance professionals must develop a strategic mindset to balance risk and reward while ensuring long-term resilience. This conclave provides a platform for students to explore critical areas such as risk management, investment strategies, digital finance, and financial sustainability by fostering knowledge sharing and skill development. The event aims at empowering future leaders to navigate financial complexities with confidence and agility.
We are deeply grateful for the presence of our esteemed guests today. To express our gratitude, I would like to request Dr. Rashmi Mahajan Ma'am, Deputy Director, Balaji Institute of International Business, Kindly welcome Mr. Hemal Vakil sir on the dais.
Now, I welcome Dr. Shubhra Anand Ma'am, HOD Finance, BIIB, to kindly welcome Dr. Mayank Patel sir. Respected Chief Guest, we are proud to share that Sri Balaji University, Pune encompasses several prestigious institutions dedicated to excellence in education, such as Balaji Institute of Modern Management, BIMM, Balaji Institute of Technology and Management, BITM, Balaji Institute of International Business, BIIB, and Balaji Institute of Management and Human Resource Development, BIM HRD. Additionally, Sri Balaji University encompasses the School of Commerce and Management, School of Computer Sciences, School of Humanities and Social Sciences SHSS, School of Liberal Arts SLA, Balaji School of Law BSL, School of Actuarial Sciences SAS, Balaji School of Media, Communication and Journalism BSM CJ, and Balaji School of Online and Digital Learning BSO DL. Beyond these, we also have Balaji Law College BLC at undergraduate and graduate levels, the Balaji College of Arts, Commerce and Science BCA CS, and Balaji Junior College of Arts, Commerce and Science BJCA CS. These institutions are renowned for their contributions to management education and have been ranked among the top in India.
According to the Times B School Ranking Survey 2024, Sri Balaji University Pune is ranked number 10th in top 100 B schools in the country. The university has secured the second position in top 36 private university in India and has been ranked 4th in top 20 B schools in Western India. We extend our heartfelt gratitude to our esteemed guest. Without further ado, to commence the event, I invite Dr. Shubhra Anand, HOD Finance, BIIB, Sri Balaji University Pune for the welcome speech.
Good morning, everyone. Good. I think everybody has waken up. Okay, great. So the formal introduction, then the informal discussion. It gives me an immense pleasure to welcome you all for this long-awaited finance conclave on risk, reward, and resilience. We are here to learn to navigate the evolving landscape of finance with agility, expertise, and foresightness. So we were discussing this topic and the event for quite a long period of time. And instead of having different sector of finance, we tried to incorporate the different domains. So we'll start our sessions from banking, because bank is the backbone of our economy. And we know that without the banking, we can't do anything. And right now, we were discussing in the boardroom that RBI is the best regulator across the globe. So Mr. Vakil sir has already demonstrated, he has already shared the views on his views on RBI's working. And since he was there in Kotak Mahindra Bank for a long period of time during the transition period, so he's able to share his experience and expertise to tell you how the banking has evolved. The next speaker, Ms. Kavita, will come a little later. She is going to talk about the outsourcing. Outsourcing is not new in our country, but the paradigm shift in outsourcing, she is going to talk about. Mayank sir is already there, so valuation is his topic, And Mayank sir, our students are very much interested in valuation. Few of them have already created a model, and they might have a very, very curious question from you. And the last speaker is from BNY, and he's into the transformation stage. So he has handled many transformation within the company. So he'll tell you how a company should transform. Since it's a finance conclave, so little less of the drama and more of the technology will be there. And sir, one more request, because here we have BBA students as well. So you need to tweak a little bit of your presentation so that they'll be able to understand. So you're most welcome to attend this session. Hope you'll have a great learning throughout the day.
Thank you, ma'am, for your insightful words. Now, we come to a pivotal moment in our event. It is our great honor to introduce our inaugural guest and guest of honor, a distinguished leader whose contribution have left an incredible mark in a financial world. We welcome our distinguished keynote speaker, Mr. Hemal Vakil, sir. Sir is an ex-Kotak Mahindra Bank executive and independent director at Rediff.com and a consultant at Aditya Birla Capital. I request my fellow student manager, Swati Gupta, to introduce and welcome Mr. Hemal Vakil, sir.
Thank you, Pragati. Good morning, ladies and gentlemen. I, Swati Gupta, student manager from Balaji Institute of International Business, take immense privilege in introducing Mr. Hemal Vakil, sir, a profound financial strategist and industry expert with a proven track record in banking, capital market, and strategic consulting. Mr. Vakil sir's career is a testament to his expertise in financial structuring, risk optimization, and corporate governance. During his tenure at Kotak Mahindra Bank, he played a pivotal role in driving financial innovation, risk management, and operational efficiencies, significantly contributing to the institutional growth in an evolving financial ecosystem. Currently, Mr. Vakil sir serves as an independent director at Rediff.com, where he provides strategic oversights in governance, digital transformation, and value creation. Additionally, as a consultant at Aditya Birla Capital, he advises on portfolio management, market expansion strategies, and capital allocation. With decades of leadership experience, Mr. Vakil sir has been instrumental in helping organizations navigate complex financial landscape, optimize capital structure, and drive shareholder value. His insight into macroeconomic trends, regulatory landscape, and financial risk mitigation strategies continue to influence key decision makers in the industry. It is my absolute honor to have him with us today. Please join me extending a warm welcome to Mr. Hemal Vakil, sir. The stage is all yours, sir.
Well, student, it is a great honor for all of us to have people from the finance industry come and speak, and I'm sure that here most of the audience sitting, be it student, be it faculty, are from the finance domain. So let us be a sponge. Let me have the students, take out their books, because we are going to have a quiz on today's session as well. So both BBA as well as my MBA students, make sure you take down all the things that are shared by the experts, because in our next week, we will go in for a quiz. So I should see those books and the pen in front of you. Come on. We are here for learning. Let us behave like one. Come on. Everybody, book and a pen. Vakil sir, all yours.
So, hi, good morning. So, thank you for the long and beautiful introduction. But let me tell you guys, I am not a banker by choice, I am a banker by accident. All right? It's just that when we joined Kotak Mahindra Finance, it was a finance company, and because the finance company got converted into a bank, I became a banker. So a lot of people will feel that all your journeys are well planned. No, they are never planned. You know, many a times the accidents are really good for your careers, and this is one of them. So let me just start on, while I'll in between keep giving you details about the retail banking and how it's been evolved over a period of time. You guys can also have your questions for the end of the session, and whatever I'll be able to answer, because I've been a last bencher. So whatever I am able to answer, I'll answer them. Yeah? Thank you. Can we have the PPT? Did you get one? So how banking evolved, in the world. So let me just take you to a few interesting slides about how banking came into picture. Next slide, please. So there were various ways through which transactions used to happen. There used to be gold, metal coins, then came in paper money, negotiable instruments, came in cards, electronic money. Now it's all about robotics, UPI, everything. So that's the evolution that has happened over time, over generations actually. The last 4 of them have just happened in the last 20, 25 years. That's the speed at which the evolution has been changing. Today, while the earlier ones took pretty long, paper money lasted for close to about 100 years. Prior to that, coins lasted for about 200, 300 years. So that generations used to last so long, decades. And now every 5 years you have something new. Going forward, probably every year you'll have something new coming in. Next. This is about the history of banking in India. There are 2 periods primarily. One is the pre-independence period from 1786. That's when the first bank was ever born. A kind of a bank was formed till 1947, which is till India got independent. Post that, post-independent, again there are 3 parts to it. There were pre-nationalization stage where banks were private in the sense they were not nationalized. Then there was this nationalized bank period. Then we had post-nationalization and the liberalization period, which is current. Next. This was the first bank in the country. Bank of Hindustan and General Bank of India were the first bank to exist way back in the 1800s. All of these banks, and if you see at that point in time also you had Bengal, which is Calcutta, Madras, and Bombay as a premier towns because they were all port towns during the British era. And these were the only developed cities during that time, so-called cities at that time. And they all had banks. The General Bank of India, Oudh Commercial Bank, Bank of Bengal, Bank of Bombay, and Bank of Madras. All of them were formed during that time. They got amalgamated in 1921, and that bank was named as Imperial Bank of Commerce. Today, the same bank is called State Bank of India. So it used to be called Imperial Bank of India, you know. In 1969, government nationalized all the banking operations, and that's when all the nationalized banks came into picture. We had close to 21 banks nationalized that point in time. Can you name a few banks other than State Bank of India? Nationalized banks. Yeah. Probably the next generation will not be able to name these. Because now we only have about 9 of them, all consolidated into one. State Bank had 7 different subsidiaries. State Bank of Indore, State Bank of Bikaner, State Bank of Saurashtra, State Bank of Patiala. All of them have got merged into State Bank of India. Okay? And why was these? Because they were all princely towns. Indore was a princely state. Hyderabad was a princely state. The prince or the king used to run that bank. And that's how it used to be State Bank of Travancore, State Bank of Saurashtra, State Bank of Indore, you know, State Bank of Patiala. So those were the times when the kings used to own those banks. And that's how that name was there. And finally, everything got amalgamated. Post 1992, private banks came into picture. Global Trust, UTI, SDFC, and ICICI were the first 4 banks that came in 1992. That's when privatization of banks happened during that time. So out of them, UTI got changed into Axis Bank, GTB got merged into Oriental Bank of Commerce, SDFC and ICICI still remain and continue to go strong. Next. So as I said, while you have public sector banks, you now have private sector banks. You heard about foreign banks. You have many of them in Pune. Yeah. There are regional rural banks, which if you come from rural India, you'll find them. You'll have cooperative banks. Pune is a hub of cooperative banks as well, you know. And then there are these small finance banks that came into existence in about 2009, 2010. So they are primarily microfinance institutions and which needed governance were merged and made as small finance banks. And then there are these payments banks. Any payment banks you know? Paytm Payments Bank, Airtel Payments Bank. Airtel Payments Bank I think has shut off their operations now. So yeah, next. So these are the 12 PSU banks that are now left from the 21, and prior to that there were another 10 of them. So, and look at the private sector banks there. They have become 21. So this is to ensure efficiency in the banking system. This is to modernize the banking system. This is to ensure that customers get the best of preferences. And that's why private banks seems to be doing far better and a larger number now. Okay. Next. Can we run the video first? There's a video there. Yeah. So we'll run a small video which will give you a complete idea about the banking evolution.
To existence all of a sudden. Let's turn over the pages of banking history. The first banking system, a term that has become an integral part of our lives. From saving money, booking online tickets, taking a loan, to any other money-related operations. Banks have become the bridge that connect us with money. But how did they come into existence all of a sudden? Let's turn over the pages of banking history. The first banking system was started in Italy. In the Middle Ages, Italians used to carry out their commercial trading and transactions sitting on a bench. In Italian, the word banco refers to a bench. With the intervention of many clients and customers, the word banco underwent changes and became bank. Technically, banking system was started right in the Paleolithic age with the advent of barter system. People exchanged and traded goods they already had for things they needed. It was beneficial up till the point when people felt that they required a common commercial tool for trading. As gold was commonly used by everyone, people started using gold coins as a trading tool, which led to the birth of banks. The inception of banks was mainly due to two kinds of people, the merchants and the goldsmiths. The traditional banking system was initiated through the concept of safe deposits. When the merchants traveled all over the world, they needed a place to safeguard their gold coins. Hence, they approached the goldsmiths to store these surplus gold in their safety vaults. This is how safe deposits came into existence. When the money was idle in the safety vault, the goldsmiths started lending it to people, earning an interest from it. He also gave a part of the profit to the merchants as an incentive, encouraging them to deposit more gold coins with him. This paved way for the savings bank or deposit scheme in the later stages and is still considered to be one of the safest investment plans. These can be rightly called the stepping stones to the conventional banking system. The world's first bank is the Bank of St. George in Italy, which was founded in 1407. Whereas Monte dei Paschi is the oldest surviving bank since its inception in 1472. With technological advancement, the whole banking process is now confined to small mediums like computers and mobiles, which have made banking a simpler process. Just a click on your computer and you're into the money world in no time.
Interesting? So I'm primarily covering parts of retail banking. So when you say banking, banking has various parts to it. So one is the retail bank or the consumer bank, which is meant for all of us, individuals, which is supposed to service individual loans, individual liabilities, individual deposits, individual servicing, all of them. The second set is called the commercial banking. Commercial banking typically is anything to do with commercial loans. It could be commercial vehicles, it could be tractors, it could be any kind of commercial stuff. Wholesale and corporate banking are part of the bank which lends to companies, corporates, which are far larger in terms of size. Then you have investment banking, and then you have micro banking. Micro banking is typically microfinance and small ticket loans, very small ticket loans. So typically these are the 6 segments, and across banks, they keep varying. Someone would call wholesale banking as emerging corporate, someone would call the mid-market, someone will call them as corporate banking. So names will vary. Some bank would say retail banking, some will say consumer banking. Yeah. So this is typically these are the segments which are there, and there are opportunities across these segments. Every one of them will look at, everyone expands, so everyone will need MBAs. Next. Within retail branch banking, also there are segments in it. So you will have retail branch banking, which is for the individual customers. You will have business banking for business segment of customers. There are shop owners, there are small offices, there are showrooms, all of them use business banking. Then priority banking, or you call it preferred banking, is for someone who has more money, who has more investment avenues, So that's the priority banking. Then there's a department which is government banking, which typically only focuses on needs of government departments, state governments, semi-governments, panchayats and all that. That's government banking. Then you have task, which is trust, associations, schools, colleges, clubs and all that. So we fall under task. So the banking is managed by a team under task. So they manage these relationships, they nurture these relationships. Then there's a segment called non-resident Indians. Indians residing abroad, and their funds are managed by NRI banking team. Then there's corporate salary. Corporate salary team looks after for people who are employed in corporates like any of these companies like Tech Mahindra or any of them for that matter. Then you have something called group synergy. All of them put together, synergize into a single place and work intra-border to ensure that synergies work at place. So these are some of the segments in the retail banking side. Yeah, next. Mergers in banking. Next. So these are some of the large mergers that have happened in banking over a period of time. If you look at these, there used to be something called Bank of Bihar, which has got merged into State Bank of India way back in 1969. Look at National Bank of Lahore. That was in 1970. The Indian side came here. Miraj State Bank, Lakshmi Commercial Bank, Bank of Cochin, all of these banks got merged into the mainstream banks, typically. This is to ensure stability of those banks. Look at some of the PSU banks getting merged into private sector banks. Bank of Madura with ICICI. ICICI Limited got merged into ICICI Bank. HDFC Limited got merged to HDFC Bank, right? Yeah. Then you had Banaras State Bank and all of them. And similarly on the other side, these banks, all of them have got merged. So that's a stage of consolidation where banks have got merged to become stronger. Their balance sheets have got stronger, their customer base have got stronger, everything has got stronger now. So and there is a reason behind this. Many of the banks could not do well, they were struggling. So RBI intervened and got them into, like Global Trust Bank was struggling, so it got merged with Oriental Bank of Commerce. Any other name you have? Yes Bank recently got a lot of funds from all the banks to get it afloat, right? So RBI continuously is a watchdog for the banking industry, and it has a clear focus and vision to ensure that the monies of individuals, the monies of companies remain safe. Next. So this is how there are various trends that have developed over a period of time. Look at the first one. The syndicate bank started way back in Manipal, and he was a doctor who started depositing 25 paisa each from the ladies of the village. And that is how he made this Canara Industrial and Banking Syndicate, which later got named as Syndicate Bank. This is a story in itself. You guys can go into YouTube and watch it, that how Syndicate Bank was born by a doctor by profession. He was not enjoying his medicine. So he said, I would want to do much more. And that's how he started this. Look at Suvidha. Suvidha was a product from Citibank that changed the entire banking scenario. That was the first time ever where a foreign bank came with a zero balance account for salaried employees. So way back in 90s. Today, everyone offers a zero balance account. But that was a game changer at that point in time, way back in the 90s. It was the first bank ever to give it. All the three banks came out with anywhere banking in 95. Earlier, way back in 90s, if you had a State Bank of account in Wakat branch, you had to go there only. You couldn't go to Hinjewadi branch and say, I need to access my account. Today you couldn't do that, right? You can do it from Bombay, you can do it from wherever. But that time it was not possible. These three banks did it. At Kotak, we did three different things. In 2003, we were the first to start home banking. He said, you don't need to come to the bank will come to you. We're the first to do it across all segments. 2011, when RBI introduced saying that banks can decide what interest rate to be paid, we were the first to deregulate the interest rates to 6%. We're the first bank to do it in November 2011. And in 2017, Kotak 811 came in. How many of you know Kotak 811? Any one of you? No. So that's the 100% digital account by Kotak. You don't need to walk into the bank branch at all. Everything is done, starting from opening the account to every single transaction can be done there. AU Small Finance Bank just recently launched video banking. You just have to, talk to your RM on the video banking route and your transactions are done. So these are some of the innovations. Banking is all about innovation, being ahead of time. And this is what we've seen, that over a period of time, banks have innovated and they continue to innovate. Now they continue to innovate through the digital route. They do robotics, they do AI, they do everything there. Yeah, next. When we started the bank in 2003, our transactions were physical. We used to have large registers at place. We used to write the registers. When we closed the end of the day, we used to write the end of the day. We used to buy cash from the vault. It was a register. You had to sell. It was a register. For every single thing, we had registers at place. And all the transactions, you could feel the movement of transactions happening at the bank. Paper moving from here and there. Now, there are no invisible, there are transactions which are not visible at all. When you walk into a branch, you don't see any paper. Very few papers that happen to be there. So the transactions have now become invisible. Digital banking technologies, all of them now are into place. BaaS is in a big way, banking as a service. Most of the fintech use this as banking as a service. And today, if you see, banking is more or less invisible. How many of you pay through UPI? You don't need to go to a bank, right? That's invisible. The banking is there, but it's invisible, right? How many of you drive through and pay your toll? Almost everyone. You don't need to remove cash to pay. In fact, through the tag, you can also buy petrol at many of the petrol pumps. You don't need to actually pay at petrol pumps. They are scanned there and then. So this is something. Now loans also happen on the mobile itself. You don't need to walk into a bank branch, ask for a loan, get your paperwork signed. Everything is digital. So that's how it's being said that the transactions are now invisible. You can't see those transactions, paper movement, agreement moving from one place to another. You guys haven't seen that phase where the guy will come with a set of an agreement booklet, which each of these pages need to be signed, 140 signatures to be made. All of them are now invisible. 2 clicks and it is done. And that is why it is called invisible banking. Look at this, no PDCs. There used to be a time when I used to take 48 PDCs for a car loan, 60 PDCs for a car loan. Now it's simple ECS. One single click and it's done. Koi janjat nahi, nothing. Or else I had to sign 48 checks and hand it over to the financier. When we used to do SIPs way back in 2003, we used to give them 12-month SIP signed with the date put in, with the AMC name. All of them is no more. So that's the huge change that has happened over a period of time. Yeah, next. This is the latest, with India growing at 6 and 7% and rising income rates, dual income in the family. This is something which banks now have got into, and they're doing very well in the wealth management space. Typically, because now what happens is, while you earn, you also save a lot of money, so you need to invest. and there are a lot of investment avenues, and that's how this entire thing has come. Banks work towards your investment planning, tax planning, estate planning, retirement planning. All of them is done by the bank now. And that's either done by the private bank or the wealth management team or by your dedicated relationship managers. So these are all also career options where you go and do it for your clients. Next. So when we said, when it comes to investment products, wealth products, saving products, earlier we used to have just one simple mechanism. If you ask your dad, it will say the best, what you call saving is term deposit, fixed deposit, right? Now you have so many options. You have fixed deposits which continue to remain there. You have mutual funds, you have insurance, you have debentures and bonds, you have larger set of customers, you have portfolio management services. You'll have alternate assets like gold, silver, ETFs. You have real estate services where people now also invest there, equity broking, all of them are there now. So the entire banks have transferred from just savers to investors, from a perspective of providing holistic service across. And each one of you could play a role in it. Next. This is some of the types of banking within a bank. See, this is what the various product suites are. You look at it. In retail assets, if someone is doing assets, there are so many product lines that are there. There's a requirement for a home, there's a home loan. There's a requirement which is an immediate requirement for anything, medical emergency or anything, there's a personal loan. There's a credit card, there's a loan against property, there's an auto loan, consumer durable loan. There's then retail liabilities, which is your savings account and current accounts. On the branch banking side, these are the certain verticals that I said you will be there. Someone could be part of the acquisition team, someone could be part of the relationship team, someone could be part of the corporate salary team, someone could be part of the investment banking team. These are some of the avenues which bankers provide, Then there are cross-sell avenues like insurance, mutual funds, ETFs, bonds, investment advisory services, PMS services. All of them are your future options available. Yeah. Next. The earlier slide was about consumer banking. This slide is about commercial banking, on what all does commercial banking do. They do agri SME loans, they do agri loans, they do working capital loans for agriculture, non-allied products, food products, gold loans, tractor and allied equipments, commercial vehicle loans, commercial equipment road, all of these come under commercial banking. So these are all parts of commercial banking. Next. These are the parts of wholesale banking. You'll have SME as a segment, you have mid-market as a segment, you have corporate as a segment, you have large conglomerates as a segment. Mahindra is a large conglomerate, Tata is a large conglomerate, Aditya Birla is a large conglomerate. So they are large with multiple companies under them. And then there are MNCs. Any MNCs that comes into India, there's a separate division and a department that looks after these, their banking requirements. So this is about wholesale banking. A lot of them will get fascinated by this, which is investment banking. Investment banking also looks at mergers and acquisitions, capital markets, IPO, structuring and advisory, all of them. Next. So typically, this is what I say, banks may or may not be, but banking will remain. You might not see banks in the future, which is the typical brick and mortar. Your banks will be your mobile, your banks will be your laptop, but banking will continue to remain. So, thank you very much. Any questions, or was it too fast?
Thank you, sir, for your invaluable insights. The floor is now open for questions.
Great. So Mukund, what's typically happened is there has been a huge shift of movement from the typical savings to other investment avenues for two reasons. One, everything is now available on the click. Equity markets are soaring. So an informed customer will typically move these funds from his savings account to mutual funds to equity broking. So what happened is then banks, to ensure and to protect their deposit base, started offering term deposits. Now a savings account will cost the bank say 3.5% or 4%. A fixed deposit will cost them 7.5%. So that impacts the net interest margin. Net interest margin is nothing but your cost of funds on the one side and the cost at which you deploy on the other side, right? So banks try various means of getting low cost deposits. And see, this is more cyclical. And if you see, it started easing now, given that stock markets are in the red for a couple of days now. So now again people have moved their savings, or people have moved towards term deposits. So the NIM pressure will continue because of the competitiveness. So you'll have to figure out ways to cut cost, cut credit cost. Typically credit costs are the highest in any lending scenario. The moment you increase your efficiency on both sides, you will be able to protect your NIMs.
Hello, sir.
Yeah, it's audible.
Hello, sir. I'm student manager Rebecca Anthony from BITM. Sir, my question to you would be, since you mentioned about banks, so what is the fraud navigation for any measures taken to safeguard the data of, say, such a huge database that's taken? So is there anything that in measures taken from the side of the banks?
Banks spend huge money in protecting the database for multiple, there's a separate division on the data that is protected at the bank. There are multiple layers of firewalls. There are databases that are duplicated and kept at minimum of two locations to ensure that data, if something happens at a data center at point 1, the point 2 is readily available. So, and from a fraud perspective, obviously there are large teams working on frauds, because given the fact that every single day banks will receive hundreds and hundreds of complaints on frauds. Whether it's the mistake of a client or not, the complaint will surely come in. So, and fraudsters are always 2 steps ahead of even bankers for that matter. So, but there are large teams deployed, and many banks have risk containment units, RCUs, which periodically, they do 2 things. One, we keep updating customers on the latest fraud trends and tell them not to share OTPs and all that. And second is the other team which ensures that the internal fraud mechanism is all at the branch level, because the fraud can happen at both sides, the customer side and the employee side as well. So both sides are protected completely on those.
Correct, sir. But what about business level, sir? Business level, there's a huge fraud that goes around, and then that creates a huge risk to banking industry on the whole, right? Because it affects the bank on the whole. So how, any measures taken for that as well?
No. So when you say business risk, it is the credit risk, where businesses take the loan and then not repay, right? So that's the underwriting risk, and that is where banks are. See, if banks don't take the risk, you're not in the banking business. So how good you underwrite your credit risk will also ensure that your NIMs are at place. You know, the banks which are large enough have phenomenal net NPA rates of just below 0.2, 0.25. And they're all priced in when these are lended. So when a bank lends across the loan categories, there is a risk weightage attached to it. In fact, RBI has now also allocated capital accordingly. For personal loans, you need to allocate 125% of the capital to ensure that loans don't go bad. And it also ensures your cost goes up significantly, so the customer has to pay more. And this was a means, because in between a lot of personal loan businesses was going at 20% CAGR, which is a high risk to the economy. And that is why RBI intervened at the right time. Micro loans and all these loans intervened and ensured that this slowed down, and eventually it slowed down. In fact, most of the banks have been flat over a long period of time. This is something which RBI does periodically.
Thank you, sir.
Thank you. Any other questions? Yes. If there are no questions, then thank you very much. Thank you.
Thank you, sir. We will now take a small tea break. Student, please note that tea is served on third floor. For girls, my left side, and for boys, my right side.
followed by the mesmerizing inaugural address, we welcome you back for another captivating session. For this, now I welcome Dr. Sachin Chavan Sir, BIIB, to kindly welcome CA Kavita Taparia Chakraborty Ma'am. We now welcome CA Kavita Taparia Chakraborty Ma'am, Founder Director of Connect Books and Taxes, Virtual CFO and USA Tax Consultants. I request Student Manager Hardik Maheshwari to introduce and welcome CA Kavita Ma'am.
Good morning, ladies and gentlemen. I, Hardik Maheshwari, student manager from Balaji Institute of International Business, take esteemed privilege in introducing CA Kavita Taparia ma'am, a distinguished finance professional, entrepreneur, and mentor. A Goldman Sachs scholar from IIM Bangalore, CA Kavita Taparia ma'am brings over 3 decades of diverse experience in finance, taxation, and global business consulting. She is the founder and CEO of Connect Books, formerly Connect Consultancy Services Private Limited, a thriving financial outsourcing firm with over 200 professionals and a multi-million-dollar turnover. With offices in Pune, Ahmedabad, and New York, her company provides high-end financial services including US bookkeeping, taxation, audit, valuation, and business setup consulting, with a strong focus on US-India treaty compliance. A qualified chartered accountant since 1996, she started her career as a visiting faculty at IIM Calcutta and HLRI Jamshedpur, gaining valuable experience in Singapore's financial sector before venturing into entrepreneurship in 2010. Since then, she has been a trailblazer in the industry, leading Connect Books to remarkable growth. Her excellence has been recognized with several prestigious accolades, including Best Upcoming TPO by the Economic Times in 2022, Best MSME by the Women-Led Business in 2024. Her inspiring journey of building Connect Books from the ground up has been widely covered by media houses and is available on YouTube and various platforms. Beyond her professional achievements, CA Kavita Tapadia ma'am is a visionary leader, a strategic thinker, and an advocate for women's financial independence. She is deeply committed to empowering women to achieve a healthy work-life balance, and her emotionally intelligent leadership makes her a problem solver and motivator in both professional and personal spheres. Please join me in welcoming CA Kavita Tapadia ma'am to the stage.
Hello. Can you hear me? It should not happen that my voice is more audible than yours. So good morning, everyone. Namaskar. Respected Chancellor, Vice Chancellor, dignified and distinguished faculty of Sri Balaji University. Smita ma'am, thank you for having me here. We just had a very interesting session by Sri Mayank on banking. Before I actually take up my session, can you hear? Isn't it echo? It's not echoing, am I correct? Yeah. So today's session is the Finance Conclave 2025. Before I actually take it up, let me take a moment to pay my tribute to Shri Bala sir, whose legacy today we are enjoying. It was a great sight when I entered your campus. It reminded me of I am Calcutta Joka. Till date, I used to say that is the one of the best management campus I have seen. Now I'll think twice. You guys have a beautiful campus. I love the greenery, and what really loved is those glass bottles, which shows that you are in the right hands. You are being taught about the sustainability. Just one of my person from Connect, he's here, he can tell you, if I see any disposable cup, they get hell scared of me because they know they are going to get it from me. So great to be here. I'm honored, privileged to be addressing this beautiful game changer of tomorrow's, the whole finance function and the world, taking care of the way you are being shown and taught. Coming back to the risk, reward. I'm sorry. Oh, I'll have to hold that. No, I don't need it. I'll hold it. I'm sorry. Can you hear me? Was earlier better? You want me to stand here? It's a little difficult. When I get little hyper, I start walking. So just please bear with me. I'll try to stand and talk from here. So today's finance conclave, the subject is risk, reward, resilience, and the competencies or the skills which required for today's finance function. So I'll begin with understanding the words which are picked up by, so this is a technical glitch, not the finance glitch, so I'm not worried. So let's start by discussing in a layman's language, how do we understand these words, risk, reward, and resilience? I'm not talking about the dictionary meaning. What is risk? So each industry, they define risk differently. It's done? What I believe is, risk is when you have 100 doors open, you have 100 opportunities in front of you, you ignore the 99, choose one. Ignoring those 99 doors is the risk you are taking. Do you agree with me? If you had some other commitments today, maybe your studies, being Saturday, some work at home, or some other personal commitments, you chose to ignore them, took that risk, and attending this session is called the risk. What is reward? Reward is when you are deciding to ignore 99 doors, whatever the opportunities or the options or the choices you have, when you decide to ignore, definitely there is some calculation, right? Do you agree? You are calculating something that, okay, if I walk through this door, if I decide to attend this session, this is something will be added to me. It could be monetary, it could be anything. As right now I'm not attaching these words to the finance function, reward could be anything. But there is something, a calculation we are doing, the return on the investment of your time or any kind of a resources, that is called the reward. Are you with me? Yes? Then what is resilience? If we will see the dictionary meaning of the resilience, it says there are a number of things. I like the word flexibility. adapting to the situation is the resilience. I believe the resilience should come between risk and reward. Do you agree with me? Because when you take the risk, when you have 10 choices, and you decide to go with one choice, you prepare yourself to walk through that door. When you prepare yourself to walk through the door, you are adapting to that situation. You choose to let go something, that is called unlearning something, and you choose something to learn. That is resilience. That is how a vernacular student understand and implement resilience word. We speakers, we are like you people, but we have to add some drama to our presentation. So just you will see some dancing figures are coming on the screen, and this is the same which I spoke. So risk is you choose one out of whatever opportunities are available. Rewards it, not necessarily if you are taking high risk. Let me not attend tomorrow's session. Instead, let me sleep. I will get all the value addition by sleeping in my dreams. No, it doesn't work like this. High risk is not the high reward. And when there is a proper permutation, combination of these three, then you know you are there at success. I have decided to speak on a subject called globalization of finance function. We are in the world wherein it's kind of a Vasudeva Kutumbakam. The whole world is our platform. The whole world is our pitch. The bat is in our hand, and it's up to us where we want to bat. What do you mean by globalization? I would like to tell you one story. Not really the story. The people from my generation, when I decided to do CA, I'm talking about 1992. I know many of you were not even born. So in the year 1992, when I decided to pursue CA course, my first audit was that book used to call Chopra. Have you heard this word? The red three-folded books. You open it like this, and instead of debit and credit, that used to be Zama, Nave, Khate, Shubh, Labh, These kind of words I started auditing. And audit used to be this kind of a tick. The whole book was written with the blue pen. The red and green pen were used for auditing. When you are putting the tick in front of the number like this with the green pen, it's audited. The audit trail could be established. But when you are using the red pen, there is some questions or the queries we have for the client. This is how I started my finance career. And what am I doing today? Sitting in Pune, I am filing and discussing the tax return of an American who's sitting in Europe, whose wife is in Spain, children, one is studying in Singapore, one is studying University of Columbia, both are dependent on them, and I am filing its tax return, sitting in India, talking to IRS and talking to the various states they are attached with. This is the impact of globalization. How did the globalization started? Our first session, I just picked up one thing, the Citibank entry. You remember he did mention about the Citibank entry and how the zero bank balance accounts and how the ATM were introduced. So when did the actual globalization started? Whatever little or more knowledge of economics I have, in the year 1991, the then finance minister, he introduced the national economy policy. Under this economy policy, he requested the countries, the foreign countries, why don't you come and start your business here in India? They opened the capital market. They allowed the FDIs to enter. They asked, why don't you hire we people? English is no more a foreign language to us. Though we have a little heavy accent, but we understand what you are talking, and if we are polished properly, definitely we can talk the British and American English, right? Am I correct? We are a country who has a young population with a fire in their belly because we have been always tagged as underdeveloped country. No, I hated it. I hated it when I was a student like you and they used to refer India as underdeveloped country. I used to feel, no, this is not going to happen. And then from there we have become, they call it now a developing country. Now they will call us a superpower, right? So globalization doors were open officially by 1991 under national economy policy. When the doors were open, definitely there were the risk takers, right? When you have to enter a country like India, which is so diverse, when you take the first one who must have entered, he must have taken some risk, calculated something for the rewards, for the ROIs looking for. Whatever, again, a knowledge which is provided by Google or my experience of listening and reading others, IT services and call centers were the first one to enter India. What were the call centers? I'll just briefly introduce, thinking you guys don't know, which I know I'm wrong, you know what is call centers. So, whatever, there was an AMC of the products sold back in the US or UK. Okay, just one disclaimer, while whatever little session I have, you will hear more of a US from my, whenever I'm talking, because that is my field, that is my pitch. I work in the US domain, US geography, that is the reason. But that does not mean there are other countries. So my focus will all the time will be the US. So American Express started, Bank of America started their call centers here in India. Whatever customers are issues with their checkbooks, their account opening, they thought they are calling. Am I audible? Yeah, I know I talk very loud, but yeah, I think that's, at times it works. Yeah, so when the customers, the prospective customers or the existing customers used to call Bank of America for whatever issues they had, who was picking the phone? Here in India, actually her name is Kavita, but you are talking, hello, Mary this side, may I help you? This is the way the call center started. And that was the first step of service industry entering into India and globalization of the services and opening a huge market, huge opportunities for we Indians. I always tell one thing. I have two children. Elder one is Dhruv, who's pursuing and working in the US. His only job or only understanding of finance function is salary is being credited and salary is being spent.
I have the second one who's into fashion industry. So they always say, Ma, finance is very boring. I said, if taking oxygen is boring, finance is boring. You can't avoid it, you can't ignore it. Whether it's a inflation, whether it's a COVID, whether it's a recession, whether you are a successful businessman, whether you are a, still struggling businessman, you are on employment, you are looking for employment, you are a student, you are a child who's taking a pocket money, finance is a part as soon as you talk about money. Do you agree with me? If you are being given a pocket money of say 500 or 5,000, you need to know the planning of it, budgeting of it, spending of it. So you cannot avoid the finance function. You don't necessarily need to pursue the career to study finance. You need to understand how does the finance work. So as soon as the doors were open to the foreign countries for entering in India, as I said, you talk business, why the business is being done? To make money. When you are making money, the taxation is the part, right? Everything is related with the money, and the finance and accounting and taxation function got huge opportunity, needed to change from that red color book. In Marwadi, it is called Sopda. Even in Gujarati, I believe, because that is where I have studied and worked. That is the reason I'm using the jargon or the word. Along with the finance function, the technology had to change. From the books, we moved to computers. I still remember. I really still remember. Do you know? When our office in 1993 got its first computer, it was in a room. We had to wash our hands because any dust particle was not allowed there. And my boss he wanted us to cover our mouth also, because if you are talking or breathing, that will get affected. Computer needed the AC full time. Just imagine from there till now, wherein the whole phone, it is working as a computer. So the advancement of technology, and let me tell you one thing, I'm going little away from the subject I've chose. Right now, as I deal with the youngsters, we have around 200 people working for us, and most of them are below 30 or 35. They get scared of AI. 2000 was the era we were scared of computers. We've been told computers are going to replace humans. No more accountant will be required. Everything will be taken care by softwares. We do not need registers. Everything will be calculated by the Excel MS Office. People will not be required. It doesn't work like this. So I'm just giving you, we were scared. What do you think? After computers, the job opportunities have increased. Do you agree? Tremendously. I'm telling you, with AI, the actual human brains, the one who's using left and right, both side of the brains, those people will be needed, appreciated, and demanded in the market. The repetitive work, that will be taken care by AI. So, okay, coming back to my subject. So, technology and regulatory changes. What are the regulatory changes? Each foreign country has their tax regime, audit rules, accounting rules. Look, accounting and mathematics is same. 2 plus 2, you go to Mars, you go to Africa, you go to America, it's 4. Let it Elon Musk say anything, or Donald Trump or Modi ji. 2 plus 2 is going to remain 4. Similar way, accounting and the finance function, the basic of it, the debit remains the debit, the credit remains the credit, the cash flow remains the same. Maybe this side, other side, the presentation, the words we are using in cash flow statement, they could be different. But at the end of the day, it's the same. But what makes it different is the regulatory compliances, statutory compliances, the taxation rules, the way the businesses are handled, the way their culture is, their spending habits are. So human element is different because of the way they have been nurtured and brought up. That affects this function. Am I connecting with you people? You're finding it interesting what I'm talking about? Huh? So, we needed to understand when the US entity entered, UK entity entered, Japanese entered, boosting our manufacturing, ancillary units, call centers, logistic, supply, the way the purchasing, the e-commerce, we had to learn the different regulations and the compliances. And that is where people like us, people like me, grabbed the opportunity, took a very big risk. Let me tell you, as a beautiful introduction, thank you, someone, he's not sitting here. Thanks for the introduction, but still I would like to add, again, take your attention away from the actual topic because I'll be coming back. I come from a town called Malegaon. Till date, we do not have railways. Always been, maybe because of a father, because of my father, always been extremely independent, wanted to pursue CA in 1991 when there were, after graduation only the CA was open. It wasn't, like after 12th you gave the entrance or foundation. When the CA course started, hello. So when I started, what was the link? I think I forgot. So when I started pursuing my CA course and I came here, the language was a very big barrier because the BCom, I've written my BCom papers in Marathi medium. Someone asked me, you speak very beautiful Marathi. That's my first language. Though my name shows I'm Marwadi, Bengali, I don't know. At the end of the day, I believe we don't have any kind of tags. We are Indian at the end of the day. So when I started my CA, the first job, though why I wanted to do CA? Because I wanted to sit in the office, do the tax return, do the auditing, do my practice, because that is what we were taught about. Yahi karna hai, CA is what? But I took a risk. I got married. I went to Calcutta. I got my first job at IIM Calcutta in Joka as a visiting faculty. I started teaching there cost and management accounting. I think those students, they liked whatever I was doing. I was called by XLRI Jamshedpur. I was visiting faculty over there, and then I thought, Kavita, chadna, why you want to do practice? Let's choose academics as a career. I went to IIT KGP, that is Kharagpur. I applied, I sent my application for PhD. And you'll be surprised, my application was rejected. And you know the reason? Then, I'm talking about 96, 97, they said, you need to do MCom. Because then, CA was not considered as masters. Me being rebellious in a nature, I wrote at least 100 letters. That time, internet was not accessible to me. But handwritten 100 letters to ICAI, that is the university which gives the CA degree. What the hell? I am a professionally qualified chartered accountant. Why I am asked to do MCom to pursue the PhD? Nothing happened today. That's not the case. The CA are equivalent to masters and they are considered for PhD. Again, I took the risk. I started my practice which I wanted to. I did it for a couple of years and then again I tagged along with my husband and went to Singapore. You know what I was doing in Singapore? Very interesting job. I was the caretaker of the casino of the Star Cruise, which used to go from Singapore to Colombia. Trust me, this short girl or lady with 5 bouncers with those big, big guns, few people with the bags, and that bag contained USD dollars. And I'm the tiny one. Can you imagine? I'm telling you, my English was much pathetic. But walking, custodian like that, and walking there. Yes, that was a risk. That was experience. And I was surprised. Here there is a USD in these bags. I have to account in Singaporean dollars because that particular job was outsourced. Guys, I'm introducing you to the subject, to the opportunities which is extremely attached with your division BII, that is the international business. So I really want your attention. I'm seeing few are talking. I have always a habit of having a good assumption. I'm sure you're discussing the points raised by me or you are talking about me. So thank you, no worries. But right now, let's be with me. Trust me, I'm opening or I'm trying to give you more information about the opportunities which either you are already aware of, but more information comes from me because I am doing it. I'm not preaching, I'm doing it. So the USD dollars, Singaporean dollars, and I studied it Indian rupees. Trust me, my whole 2 years of Singapore went into conversion. That time 30 rupees were Singaporean dollar and US dollars were around 39-40 rupees. Oh, $1, 39 rupees. One Singaporean dollar, Indian 30 rupees. मतलब ये कितना होता है? This calculation, the whole 2 years went in that because I was surprised. Oh, our Indian rupee has such a less value. What is today's USD? Anyone? 86, 87, something above 85. I came back from Singapore, well introduced with the word outsourcing. Somewhere back of the mind I knew I'm neither going to get back to academics, nor I'm going to get back to practice. I am going to start something of my own, take charge of whatever little I've learned in Singapore. But the sales were the major challenge. I decided to find the problems. Let him finish his phone call, I'll continue. Shall I? So, when I came back to India and decided what I want to do, I wanted to find a problem. I wanted to find a problem and provide the solution. So guys, if any of you or all of you want to join this startup mission, startup marathon, the first thing you have to do is find out the problem. What problem is there for which you are going to provide the solution? You have to redefine that problem. Redefine in such a fashion that you can give the probable solutions to those problems. I have come out, I came to India, I connected with my Singaporean entity for whom I was working. I said, Charlie, you have number of projects and you lack people. Why don't you send your plain and vanilla bookkeeping for which you are paying X Singaporean dollars? I will do in the same number but in Indian rupees. You are paying 3,000 Singaporean dollars, I'll do it in 3,000 Indian rupees. Why don't you give me that work? And that is how my entrepreneurship, my journey, or we started building Connect Books and Taxes. The outsourcing of only and only accounting and tax industry is growing at the 12.1%, if I'm not wrong, 12.4. Can you imagine? We are talking about billions of dollars industry. Have you heard this word outsourcing before? How many of you? Can you just raise your hands? I believe 60% of the capacity of 200 students are sitting here, if I'm not wrong. So 60% know what is outsourcing. Have you heard the word offshoring? Can anyone tell me what is the difference between outsourcing and offshoring? Just raise your hand if anyone knows. Don't open your mobile. I'll explain it in a better way. I've been called, I've come from all the way NIBM. These people have come from Mumbai. This is far off, trust me. Offshoring is, I'll give you the example. So when Bank of America decided to have their call center, what did they do? They sent one of their officers to India, asked them to find a city or a town, lease a place, hire the people, start a division of Bank of America, and the call center started. Now I'm converting into a kind of a definition which I would like you guys to know is, when an organization decides to start their one of the process to offshore, to foreign country under their own name, that is called offshoring. It's a captive unit. What is the meaning of captive units? Wherein the capital, the working capital, everything is being introduced or inducted by the main company which is in somewhere else, offshore. The word offshore means the foreign country. So when you have decided to pass on one of the process to another country under your name, so you start a subsidiary of your main company. That is called offshore. What is outsource? Outsource is, there is a relationship difference herein. The one who's giving is a principal and to whom it is giving, it's a vendor. So you ask someone to do your process or any function and you pay him cost plus profit or whatever relationship, you know, the way you come up with the pricing. So that is called outsourcing. So and if you ask people like us, it's a very simple. Offshoring is the captive units. Outsourcing is you yourself is the owner. The principal has not invested any amount. That is the difference between the offshoring and outsourcing. I have missed the R in the, I should have written the phrases. Later I realize I've written the phases, but it's okay. You can give me that much discount. So as I mentioned, what is outsourcing and offshoring? Any questions you guys have here? I know I am allowed to take a question answers at the end, but at times I enjoy taking the question when the discussion is going on because the flow is different. Any question you have here? I won't mind taking that question. Okay. Now I mentioned about the Bank of America. I mentioned about how the call centers were the first babies of this offshoring and outsourcing. Apart from that, IT services were the first one to really boom this market and open the thousands of opportunities. It started with very small things, you know. Just maintain the website. Just fix some bugs. Now, We are coming up with the products which are named. We are coming up with the gains, products. We are sending back to our principal where in the US they are putting the names and they are sold there in the US market, written made in US. So we are the whole, what is that region called? The San Jose, California? Silicon Valley, I'm sorry, thank you. The whole Silicon Valley, if you see, 80% is dominant by the Indians. I don't need to tell you because I saw in where I was having my breakfast, Sundar picture, everyone's pictures are there, you know, everyone, the CEOs, most of them are Indians or they are from Indian origins. So the IT services were the first one who opened the door, who entered Indian market, under servicing, definitely manufacturing was used. That is not my forte, I'm not talking about that. My focus is globalization of services under finance function, and that is how I'm talking. And then, as soon as the IT services entered, people like WNS, Genpact, they went to the US and they said, hey, why you are processing the payroll of all these people? Let us do that. We know how the state payroll works. We will do it for you. Why you are managing your AP, accounts payable function? We will take care of that. Why you are doing your vendor management? We will do that. We will take care of your documents. We will take care of your bank reconciliation. One. We are doing their complete accounting now. So this is how WNS, Genpact, they entered and opened the door for people like us who have come up with their own outsourcing units. Now, if you're curious, you would like to know, but why India? Why can't they have that in the US? I just told you, $1 is 85 plus rupees for us. The cost savings were huge. I told you, I took my first customer staging. Hey Charlie, you are paying them 3,000 Singaporean dollar. I will do it because I was doing it sitting with you. You pay me 3,000 Indian rupees. Very gladly he will give it to me. Do you agree? This is how the outsourcing started. It's not just cost saving. Charlie knew me because I was working for him. But herein now, everyone knows Indian education system is equally good. People are skilled. Rather, we are more hardworking. We do not carry our white label or blue collar when we are working. The culture, the value system which we have, we believe whatever काम we are doing, which is giving us either bread butter or झुणका भाकर, that is very important to us. We do not say, hey, I am accountant, I am not going to go to the bank and withdraw cash. That is the job of a clerk. No, we don't do that. So that was an added advantage. Definitely people have used us then, giving us all the rubbish work on the name of, under finance function. But that's okay. This is how you start. There are some challenges and there are some benefits. So the major benefits which I have written on the slides, which I would like to read is, cost savings I've already explained. Increased efficiency. How? I don't know, do you read enough of this 40 hours, 60 hours, 80 hours, and if I'm not wrong, 90 hours a week work, right? So in the US, I process their payroll. So this is the first-hand information. They work 40 hours a week. But the actual worker, let me tell you, disclaimer, 40 hours of productivity is matched with their work. My guys here, in India, the liberal companies like us, we call ourselves, minimum 55 hours a week. And then when the outsourcing was started, तुम काम भेजो ना, we will deliver. Let it be 8 hours or 16 hours. This is the attitude most of us have and I had. I still remember working 18 hours, just ensuring that whatever work is sending the first day, taking advantage of the time zone, I am delivering once he's up. So that increased efficiency because of our work attitude, because of our culture, and definitely we are the people, as I mentioned it to you when I've read we are a developing or underdeveloped country, it used to hurt me. And that gave that fire in my belly. And I'm sure most of the Indians, most of my classmates, they also used to think the same way, kuch karke dikhana hai. And that is give us an edge to the Indian. We want to do something more to prove ourselves. And that adds to the efficiency. That is the resilience, you know, what we were discussing then. So that added to the increased efficiency. And then the specialized skills. Because we have a complex tax structure, we understand what is bookkeeping, we understand what is CFO services, we understand what is the CS work, we understand what is the audit. That gave us another edge to be the favorite hub for offshore and outsource by the Americans. Again, a disclaimer, you will hear more of American. My study of other countries are not good. So I will refuse to talk about it. Just I'll take one sip of water if you allow me. Yeah. So that was the benefits I was discussing, cost savings. Is it convinced the cost savings are there, right? Because if you outsource the work, increase efficiency, access to specialized skills. Now, what were the challenges? There is always a pros and cons when we talk about any kind of a services. The first challenges which they found, though on my PPT I am showing the language, let me tell you, they weren't very happy with a casual attitude. Yes, sir. हो जाएगा सर, चिंता मत कीजिए सर, 9 बजे दे दूंगा. Which 9 o'clock, AM or PM? That attitude was really bad. I'm sorry with all due respect to my profession, I'm a chartered accountant, but whenever right now, I am auditor for a number of US companies. When I'm saying I'm going to sign the audit report on so and so date, it happens on the so and so date 99.99%. But my own books, when they are audited by the Indian Chartered Accountant, that happens on the last day, last minute. This whole attitude change was required and they were facing the challenges. I'm very happy because of, and I have no hesitation in quoting, because of globalization, because of outsourcing, offshoring industry, this sudden professionalism we have learned. Otherwise, that was just the part of a theory code of conduct. We got that study material, kept it till date, I don't know how many pages, which page I read, which page I did not. So the whole professionalism of Indian professionals, Indian service provider was changed because of the globalization. The other challenge which I mentioned is the language. Yeah. Till date we find it, but now I think we are enough, and I'll just tell you the story. As I mentioned it to you, I wrote my BCom in Marathi medium. I did my CA, not much of communication is required in CA field. Just, you know, the written English was okay. When I started my work as an entrepreneur in India, trust me, I'm not lying. My husband, who's from St. Xavier's, I used to give one earplug to his ear. I used to hear what the American was saying. He used to write it down by hearing. And then I used to answer that. मुझे उनका accent ही समझ में नहीं आता था. It was so difficult to understand the American accent, and let me today confess I did not work with the UK क्योंकि British accent मुझे आज भी समझ में नहीं आता. Yeah, that is a very big language challenge which we generation faced. Now you guys have the number of channels, Netflix movies, blah, blah, blah. The access is so huge. I'm talking when the computers, I shared my story. We were allowed after washing hands into the computer room. And it wasn't like this that each person one computer. The 40 people office, one computer. बारी-बारी में आता था हमारे पास में. So language barrier is still they are facing that challenge. But now, today when someone says, hey Kavita, can you give me another accountant? And I ask why? His English is not at par. But now today I'm enough confident. I said, hey Peter, I never promised to sell you the language. You understand what he's talking? He is doing your accounting. If you have any question with his accounting, I'm happy to change the resource. But if you have a problem with his are, is, will, was, grammatical mistakes, please ignore. At least we understand your language. You don't understand any of if I start in Marathi or Hindi. Okay, that's a part of being an entrepreneur. You have to be rowdy at times, I believe. Time zone difference. Let me tell you for call centers or for BPO industry, time difference is a huge problem. While for the finance function, time zone is a benefit. What happens? Just imagine a CPA who's sitting in the US, he has one walk-in client, he gave his documents to prepare the taxes. These are the documents. By when can I have my tax return? You can have it tomorrow morning, 9 o'clock. Even the client will be surprised. But why this guy, the CPA, can give him such a short deadline? Because he knows he will pass on that work to Connect Stable. While he is sleeping, we will prepare the tax return. When he is in office, the return will be ready. Right? So in finance function, the time difference worked in many places. I won't say 100%, but at many places, it worked as the added advantage. Cultural difference. I started with that, the professionalism. Sir, I cannot work. Why? मेरे चाचा के बेटी के बेटा हुआ है, वहाँ जाना है, मेरे को छुट्टी चाहिए. This is cultural difference. This everything they face. Today also they ask, how many festivals, Kavita? Why do you need so many offs? But yeah, we also found some ways. They also found some ways. And it's working fantastically. That is the reason they are saying it's going to be the billion-dollar economy. Just I'm talking about the finance function, outsourcing and offshoring. Any questions? Ladies and gentlemen, any questions? Next slide. So now I spoke about risk, reward, resilience, what all opportunities you guys can have. Not all the opportunities, the opportunity I know. Okay, the door is open now. Now you have to choose the door. You walked out of that door and now you want to be successful, that is building the competencies, capabilities. It was great to read 3 messages from 3 students of Sri Balaji on my LinkedIn inbox and said, hey ma'am, I saw your finance story interview. I also want to start something like yours. Someone said, can I have the internship in your company? I want to answer both the questions over here. If you want to start, which you can, if I can, anyone can, because I said till date, we do not have railways to my hometown from where I have studied. I started my career with academics. I tried to do my PhD, was refused. I started working as a practicing professional and then entered into the world of entrepreneur. I wanted to do something big, hired people, started with different division. I don't know how much you know about Connect Book Syntaxis. I'll just take a moment and I would like to talk about the BIIB, which I am very proud about. Connect Consultancy Services started in the year 2009 as a partnership between me and my husband. My husband is a hardcore software IT person. But we needed two partners to start this, and this is how he was added to this company. I started as a freelancer. A very small work of 3,000 rupees per month. It went on for 6 months. I want your attention. In 2010, a woman married, left her very bright career in Singapore. I told you I was working with 5 bouncers there. I started from my living room taking care of my small 2 children on a second-hand laptop and started this outsourcing journey. I never been to the US till then. Earlier I thought I will do whatever comes on my way. I was doing Indian books, I was doing UK, Singapore, US. But then I realized they start asking, hey, not just bookkeeping. Till bookkeeping it was fine. I'll again repeat that. Bookkeeping is like mathematics. Whatever is debit in India, it's a debit in all the countries. Whatever credit is here is the same. Just it has to be as per the statutory compliance, US GAAP, IFRS, right? But then they started asking me, hey, can you do my payroll? Rules, right? India has different rules of bonus, wages, PF, ESIC. US has their insurance, state insurance, federal insurance withheld taxes. UK has its own, Singapore has its own. It means what? Learn everything. If I do everything, who will grow the business? Who will do the sales? Who will talk to the customers? Who will look after the growth of the business? And there I decided, let's not learn anything. I decided to move out. I again want your attention. I am showing outsourcing and offshoring is not only the opportunities for operational work. I decided I will not be doing accounting. I will build a team first. I will strategically decide which country I want to work for. Which country will be my focus area from where I want the customers. And the first mantra for the success which I would like to give is the idea, the concept. Where do you want to work? What do you want? Which market? So I told you, you need to find out the problem. I found the problem. I found the industry I want to work for or work in. Then I decided British accent समझ में नहीं आता. USD की आदत लग गई है तो इंडियन रुपीस अच्छा नहीं लगता. सिंगापुर वाले बड़े चिक चिक करते हैं. Let me work in. I always found America as a super professional, cool people to work for. Extremely respected and respectful towards their vendors, towards their colleagues. So the first decision I took is, I started saying no to the whatever little work I was getting from other countries and started my whole focus to the US. So I decided the idea where I want to enter. I came up with a conceptual fact that I will be working exclusively for the US. What will be your units? Economics. थोड़ा hyphen word है. I'll just break it in our language. What do you want to sell? What you want to sell is what is how you are planning to sell that one unit and what will be the cost attached with that is what? Units economic. I started from 2010. I started this company Connect till 2012 or mid of 13. We were plain and vanilla bookkeepers. Just bookkeeping. Pulling there all the transaction, working in just B2C segment. Understanding the softwares. Now what is the difference between their bookkeeping and our bookkeeping? How many of you have heard of QuickBooks? So QuickBooks is a widely used accounting software like Tally. So we were doing bookkeeping in QuickBooks, Zoho, Xero. These are the names of the softwares which are used in the US market. There is one peculiar feature of US market till today I'm saying. When you interview with them, even they are interviewing an American accountant, they will ask, what are you doing? Accounting. What do you want to do? Accounting. As an accountant, for which industry you have worked? Manufacturing. No, understood. But which? Is it ancillary? Is it a final product? Whether you were looking for inventory. So there, industry-specific accounting is required because even the softwares attached with them are industry-wide. So you go for Appfolio, you go for Buildium, these are used for real estate industries in the US. There are a number of pay stubs which are used for e-commerce. Those who are into service industries, they use Xero and QuickBooks. I'm just giving you, as I mentioned, I'm no more in operation since 2011. I did not pass a single journal entry from 2011, and I am called a founder director of a Connect company, which is very humbly is a multi-million-dollar turnover company with 200 people. And I am very proud to say the 100% shares are with me. Thank you. Sometimes I like these claps. So, I have mentioned about the idea, the concept, and what are the, so I decided I will just sell the bookkeeping. Till 2013-14 it worked. But as I mentioned it to you, there was a fire in my belly. I didn't want to have just a team of 4 people or 5 people. They were paying me early rate of around $5 per hour. Though when you are and that time I told you what was the rate in 2010, the dollar conversion was 42 rupees. So I always say, if I wouldn't have worked not added any customer till today, my turnover would have been a double, just because of the currency. So anyways, back to this. I said we will do the payroll. Payroll is very different for the US. Because US has 2 statutory regulations. One is state, one is federal. Few states have GST, that is sales tax, few states does not have. So when you are selling something, the GST is attracted, in few states it's not. There are few states wherein the state tax is there on your income earned. There are few states like Delaware, you do not have the the income tax. While federal is the main agency like our central income tax, and that is charged, and they levy the liability on each one of us. Then I decided, why not enter into taxes? Guys, I'm telling you, if someone asks me the boldest decision you have taken in your life is, I'll say, entering into the US tax zone, telling people that yes, I can do your US taxes. While no degree, no knowledge, never prepared a single return. What happens if you are a bookkeeper, you do some mistake, its impact is not too big. But if you are filing an income tax return, state and federal for someone, and if you do a mistake, what will happen? penalties, notice, he's going to bash you, he will throw you out of your business. Am I right? Am I right? नींद आ रही है? So, but then how did I do that? I took my first return. Very nice guy, he's still with us, Christopher Borrells. He was a restaurant owner. We used to take care of his restaurant, bookkeeping. Tip management is another subject in the US. So we used to do his tip management. His payroll was very different. In all restaurant industry, the payrolls are different. They are paid, few are paid on an early basis, daily basis, few are paid on a monthly basis. Well, in the US, there are no monthly payroll. Every employee, let it be of any position, they are paid twice a month. So I said, Christopher, I'll do your tax return. He said, are you sure, Kavita? I said, yeah. I have experience, I've done enough. You give it to me. You know what I did? He paid me then $150 to e-file his tax return. I contacted one CPA in the US. I paid him $250 and I e-filed his tax return. You're thinking I'm cool? No, I'm not. I continued doing it for 100 tax returns. On paper, there was a loss per return, $100. And let me tell you, when the US dollar hits your bank, you get the rate of 84, 85. But when you want to send it out, the banker is sitting there. Why they do that, God knows. 3-4 rupees per dollar extra they charge us. Plus, अब तो GST भी लगा देते. क्यों करते सर ऐसा? पर खरीद आता है तो हमको कुछ export anyways. It's a different subject. So it means $100 on paper. When I'm sending money to the CPA, so when I'm receiving 150, if it is as a 50 rupees say per dollar, how much I'm receiving? देखने दो कौन सो रहा है? How much Indian rupees? 150 multiplied by 5. यार. And I'm sending 250 at the rate of 55 rupees. क्योंकि मिलता नहीं है डॉलर उस रेट में जिस रेट में तुम्हें वो आता है. So there was a loss. But what do you think? In the process, what I did? I hired few chartered accountants. I asked them, study how are they doing it. Let's write down. Let's have a research and development department. I was very fascinated with this manufacturing. I was an auditor for Kinetic Honda, you know, when I was pursuing my CA. Huge board, R&D department. बड़ा अच्छा लगता था मुझे पढ़ के. And I always used to think, I will have that one department because the people treated were very different in R&D department. So anyways, coming back to my story, we started 3 people team as R&D. Don't ask me how I paid my salaries. No husband funds, wife's shock of like this. They are very happy to do your shopping, but not such kind of a risk and rewards. My father was extremely angry on me that why did I surrendered my certificate of practice, because let me tell you another story for you people also. I was questioned in the year 2012 by ICAI that you are holding a COP, that is a certificate of practice, but you are doing a business. So then doing international business was not the part of your practice which is allowed now. So there were many regulatory challenges also we faced. So I will not on this table reveal that how I sold my precious jewelry and paid the salaries, but yes, this journey is not easy, you know. And that is the reason when you talk about your baby, you are so passionate about it. So I started building the CAs. I've hired the talented CA we started building a tax department, and this is how we hired our one CPA. And today, I'm very proud to say that we have a team of around 125 exclusively US tax advisors, not just tax preparers. They are excellent in the tax planning. They speak to the federal officers sitting in India. We attend to the notices. We ensure them. Penalty laga hai, we will handle. But what risk did I take? It wasn't just monetary, it was a risk of, will I be able to? Will I able to? Will I able to? Every night sending your affirmations, standing your day, standing in front of that Ganpati, please, I'm taking a risk. Take care of me. It's not easy journey. But then the whole life is about ignoring those 99 doors, which was my opening line of the station, and entering that one door with the resilience. So this is how I entered into the tax domain. Tax bought us. Till then we were into B2C. Bookkeeping doing for B2C, taxes we were doing of a B2B, and then one CPA contacted me. Kavita, I am fed up of my staff. Will you work for me as my team member? Will you dedicate your 5 staff for me, 2 bookkeeper, 3 tax people, working for my clients? The clients remains mine, but you will work for me, and the outsourcing of B2B started. Today we have 20 CPAs and our hands are full, and we are working on their clients. So this is how we entered. There are a number of, let me tell you, the Ola Electrical's first US audit report was signed by Connect. We are the first auditor. US, we got into the US audit. How? Again the same. I spoke my CPA. Bhai, he is giving me $5,000. He said, I start with $15,000. I don't do 5,000. I said, look, Josh, I'll do all the back office work. I'll prepare the audit report. Just your signature is required. Some bargaining. I got $5,000. I paid him $5,000. But again, eventually, we started our US audit department. Because I did not have any other directors or people who can sit in the US and get this done. 2024 was the first year when we started our New York office, and now we have a people sitting there. Though I started this outsourcing journey of providing services to the US, my first visit to the US was in 2017, post 7 years of working in this market. So the few success mantras is first, find out the problem, idealize your concept, decide what you want to sell, decide what will be your selling price. The biggest challenge is the strong team. I'm telling all the success mantra to that first question who said, ma'am, I want to start an agency like yours. First of all, if you will stuck into the operations, it's very difficult. Don't try to invent the wheel. They are available in the market. Hire the talent, let them do the operations. You have to decide on the strategies. You have to build the team. Unfortunately, till last year, finding the US accountant. Look, when I started my career, the accountant's tags were junior accountant, accountant trainee, senior accountant, CFO, right? Now, US accountant, UK accountant, domestic accountant, global accountant. So finding a US accountant, that means the one who has an exposure, was not available to the corporates like us. They were all reserved for the big fours. Ma'am was telling me, Deloitte comes here for the recruitment. Ma'am gave it to us also. We had to hire the people. So I'll tell you, till today, we have started another SBU. We call it as a Connect Trainings. We hire the people. We train them to be the bookkeeper. Now, what training we give them? Do we teach them debit and credit? We teach them how the US businesses work, how the US softwares are different from each other. You cannot compare QuickBooks with Buildium. You cannot compare Zoho with Xero. You cannot. They are meant for different industries. And this is how we introduce them, we train them for the softwares, and we give them the placement in our company. Then, this is how we started building team of bookkeepers. Then I told you how we started the taxes. For taxes also, nowadays it's little easier because EA, enrolled agent, many MBAs, they are opting for EA because they are very, very well paid. The opportunities are huge. And if you work as a EA, even for 1 year, you don't need to prepare your CV. The HR will grab you somewhere. Please leave there how much you are making, come join us. Why? Because the outsourcing taxation industry is in boom. If you will Google, you will see that US needs, as of today, 70,000 CPA to take care of the demand of the tax returns. They don't have. I don't want to get into why they don't have. Their Gen Z is not interested in this profession. They find it boring. भैया हमारे इंडिया में हमको हिम्मत ही नहीं बोलने की पढ़ाई boring. We are not allowed to use such word. भगवान पाप देता है हमको. So this tax industry is booming. That is where we were entered in US audit. Now just think, when we have opened the doors for the foreign companies, they want to have the Indian subsidiary company, right? When an Indian subsidiary company is starting, they want to find out the relationship with the holding company and they are a little scared. I don't know why this concept is that Indian taxation system is very complex. बहुत ज़्यादा tax rate है. That's wrong. Prepare one US tax return, you'll be surprised. When someone approaches us, the question we ask, are you married or are you living in together? Why this question is required? Am I interested in his personal life? No. His tax status will change accordingly. Okay, you are married, then you want to file jointly or you want to file separately? If you are living in together, you want to file jointly or separately? Do you have your children or your wife's children? Your parents are with you, or I don't want to talk about their culture, but definitely, unfortunately, it is entering our country as well, so with all due respect. But their taxation system is extremely complex, if not more equivalent to India. And what is the tax rate? Who said India has a more tax rate? Theirs is 30%, like us. Their withheld taxes, which we call as a TDS, it's much more than what here we have some escape routes wherein we can refuse, don't cut my TDS. That's not the case. Now we are a cashless economy, but they are using their cards and sages. And then working from home is a very, like work office, is there a very normal concept over there. So how you are treating their work or home as an expense, to take the office expense is a different story. So that complexity in the tax, number of CPAs, they have started outsourcing their work to India, and trust me, Ahmedabad is flooded. We have an office in Ahmedabad, and I was called for one of the talk And I got to know from my fellow speaker that there are 3,500 outsourcing units, small, from 2 people to 2,000 people. Pune does not have that much. Pune does not have. And the reason? I don't want to get into that. So building a strong team, I said it's not easy. You need to come up with a different kind of things, train them. While training, you pay them. It's not that they are paying you, because at the end of the day, you are providing them the placements as well. Continuous evolution. I shared that with you, how from the plain vanilla bookkeeper to the US auditor talking. Let me tell you, last year, we helped one divorce case to decide their alimony. Sitting here in India, we sent whatever was required, to decide on their alimony, the signed document. Sitting here, this is the effect of globalization. Very interesting. Not the divorce, but the settling of the cases, But yeah, this is something, you keep looking for the opportunities, and this is how you grow. This is how you adapt. This is how you need to remain flexible. And then, bang, the AI enters. And people say, bookkeepers will not be required. I told you my opening line in 2000. In 95, 96, we were told, computer aa gaya hai, humans are not required. How many sleepless nights they have given us? It's the same thing is happening with AI. I'm telling you, you need to be smarter. If there is something repetitive work wherein you are not using either your left or right, that job will be taken by AI. You need to be strategist. You guys will not have one career. Please, I'm happy to sign any document you want. You guys will not have one career. You will have a career with which you start. You will have to change and have to, not choice. And if you don't change or if you don't learn or unlearn, you are out from the race. Let me tell you, everyone is very intelligent now. I to wonder when I go and meet the, crowd who are in their 35s and 40s. Mera bachcha first aaya, he got 90%. I used to feel, everyone is getting 90. Who's getting 70 and 65? I really wonder. They know everything. I am so bad at technology. I had to get Pratik. If I get stuck with the computer, please help me. You're in the 5 years old, the way they handle. Trust me, this is something you need to worry about. There's so much of competition. So much competition. Staying relevant, as I've just mentioned, if you say, okay, let me learn the Excel now, let me learn the QuickBooks, data entry. No, these jobs are already taken up by AI. You need to be relevant now. With what I have started, if you decide to start, you are not in the race. You are talking about, I was told by my daughter that, Ma, the generation is changing every 4 years. I think Gen Z is already old enough now. There is some other generation has been introduced. Abhi last month, she was telling me. Alpha? Data? Pata nahi yaar. I don't understand also, but this is so complicated. This is giving you so much. You guys, look, when we were studying, we had just 3 options. Science, commerce, arts. BCom kar lo, engineer kar lo, CA to tha hi nahi. I still remember when I told my dad, I want to be CA, he was looking at my face. I know he was thinking, ab ye CA kya hai? Doctor ban jao, engineer, BCom BA karke shaadi kar lo. These were the only 3 options we had. Look at the options you guys have. Even in outsourcing, You can start a staffing agency. You can start the training company that yes, I will train these people and I'll give you, have the association with company like us, provide them. You can start selling operations. You can do the sales for the companies like us. You can do the digital marketing, content creation. Look at the options you people have. But let me tell you, that creates more confusion. But change your confusion into thinking, okay, let me try this first. After a couple of years, I'll change my career. I'm telling you, you guys will not have one career. Minimum 3 careers if you decide to be part of the GDP of India, contributor. But that again throws you with a huge competition, huge competition. Customer success. Okay, so I come from a very, very traditional school of thoughts. मेरे को ना ये बहुत ज़्यादा investors money, exit route. I'm sorry if you know any of you are from that field, but I don't understand, because I understand if I'm selling something, I need to make some money. Break even is what I was taught from when I was 4th, 5th standard. But then no, this world is working in a very, very different manner. If still you are making huge losses, people are happy to invest because they have the funds, their investors sitting in some other country, they want them to choose, they are the decision maker, quite complex situations. That is also termed as a success. Hey, what are you doing? I've just exited from my first business. How much you sold for? XYZ $1 million. Acha? What was the turnover? $1 trillion. What was the profitability? Oh, we booked the losses. But yeah, we have the number of users. This world is very complex, guys, very complex. So the success is defined in a different way. Now, people like us who have now as a mid-sized company, we get number of acquisition offers. A CPA, a big CPA who's sitting in the US, CPA company with the 20, 25 CPAs, they want to start in India. They feel, why to start from the scratch? If I acquire companies like Connect, I get 200 people set. Trust me, someone said, tu tera business rakh, tere log mere ko de de. And I'm like, huh? Who will do? Who will work for my customers? I need trained people and they were ready to pay me. You'll be surprised the amount they were offering, not for the business, for the trained people which are with me. Different algorithm, different rewards, different risk people are taking. It's a very different world. So success has, each one has its own. So yeah, I think I spoke a lot, little more than I was expected. Thank you.
The floor is now open for question and answers.
1 second, let me announce my things. Before I wrap up this session, or we wrap up this session, I would like to repeat, globalization is a huge Sone ki Lanka. Trust me. Lots of career opportunities, lots and lots of career opportunities. अरे आप बताइए ना, रील्स बना के लोग पैसा बनाते हैं यार. मतलब दिमाग काम नहीं करता. So what I'm saying, but then what will keep you, or what will stand you out from the crowd? Where is your logo? क्या है तुम्हारे लोगो में? Discipline, dedication, and I'll just add 2 more which you are practicing: social responsibility. ऑनेस्ट टू सेल्फ, और जो पैसा देता है ना वहाँ ऑनेस्ट रहना चाहिए. थैंक यू. I open my session for questions. You have questions?
Hello, ma'am. I am student manager Rebecca Anthony from BITM. Ma'am, since you spoke about outsourcing, I would like to know your. I would like to.
Hello. I have crossed 50. कान में थोड़ा problem है, रुको. हाँ बोल.
Ma'am, I would like to know your take on outsourcing and offshoring, which would actually create a sense of unemployment, say in the context of organizational brain drain. So, what is your take on this, ma'am?
It's a part of strategy. This answer cannot be a one-liner. What is brain drain? You answer me. What is brain drain?
Ma'am, it is where you have, say, in-house labor and in-house people with expertise, but then you still go to other countries in search of expertise where you can actually find it in your own country. Something like that.
I'm sorry. Brain drain is that? I don't think so. Okay, you want rephrase your question. Don't use too much of jargon. Ask me the brain drain. What I understood is different. What you are saying is different. Guys, I'm telling you, ये जो बहुत jargons है ना, मेरे को तो समझ में नहीं आते. तो you tell me what is your question? Simple is brain drain में मत बोलो. Simple पूछो.
Ma'am, my question would be that though we have people who are like workers who are well educated here, say in India, but then we don't get jobs right here in India. But then in case you find there are
So her question is, मेरे घर में बीवी है, खाना बना सकती है, why do I need to hire a cook? Am I correct? Three things. I am going to continue with the same example. So first is either my wife does not know cooking, right? Or she doesn't want to cook, or she wants to do something else than the cooking. If I make her cook, the kind of a cost I'll have to pay, it's easier to hire the cook, give her 5,000 rupees than taking care of a shopping bill. Now converting into the real life, the question to the industry is the same answer. If you have people in your country, why you are still outsourcing? I am working very closely with a CPA firm. He has his son. He says, Kavita, he refuses to sit with me even in the most busiest season. अरे बच्चे सुनते कहाँ हैं? This generation doesn't want to listen. They don't want to work because they find number crunching is very boring. So first, you don't want to do it. If you don't want to do it, why shall I put my energy in convincing and pushing? अरे कर रहे, बना ले, दाल चावल ही बना ले, but खाना बना. Why? Right? Second, if I know I can get that and remove my headache in 5,000 rupees, what will I do? I showed you the benefits. It's always easy to outsource. I'm going to get, and she's a cook. She's a chef. Yeah, nowadays they call themselves Madam Vegetarian Chef. So if you can have the more skills at a much lesser price, Why will you do that? Look, there is opportunity, there is a work, there is a money. Are you keen on taking that?
Thank you, ma'am.
Thank you. Any more questions? Piche, piche. There, there. I'll go in 10 minutes. Ruko na. I'll go.
Good afternoon, ma'am. My name is Rushi Prasad Deshmukh. I'm from BIIB Finance. My question is, as you mentioned, you have a very strong set of trained employees, which are a key, unique part of your business. So, ma'am, what do you look for in a candidate when you make him or her a part of your team? Like, what is this? What are those 2 to 3 qualities that you always look?
Very good question, and thank you for throwing that question because I really wanted to answer because I want to sell my company to you people. Come and join us. So what will the interview or the app, sit down, it's going to be long. Kyun khade rahe ho itni der? So when you apply or your CV comes to us, because we sell various services, starting from simple bookkeeping, definitely we have robotic processes for few bookkeeping functions, but the whole function is yet to be used by AI. So we do need the bookkeepers, CFO, advisory, balance sheet analysis, tax preparer. Under tax preparer, there are 1040, 1065, C Corp, S Corp, withheld taxes, payroll taxes, 990, blah, 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 blah. The list is very long. US audit, now you are fresher. You do not have any experience. This is your question. When I come to you, whether you will take me, if you will take, which service line you will add me in. So we call it as a mentoring the fresher. So what happens when we offer you on definitely some criteria, there are some skilled tests wherein your soft skills are tested, your academics are checked, your background is checked, more than a language, how confident you are when you are portraying any of your idea or a storytelling. These are the basic interview things. If you are shortlisted, then we offer you a position, if you are a fresher, as a trainee. Nothing is attached with that. First couple of months, we push you with a buddy. A buddy is a person who is very well versed with the company's culture and the deliverables. Say he's a bookkeeper. Then he will show you what all he's doing, how he's doing. And then while doing, one fine day, after 7-8 days, he'll say, why don't you do this? He sees how well you are liking it. I didn't say how well you are delivering, how well you are liking it. Look, I strongly believe though I'm a chartered accountant, I'm a salesperson, I'm a strategist. Did I learn strategy? Later, Goldman Sachs picked me up and sent me to IIM Bangalore, but I have not studied strategy. There are few skills we are born with. There are few skills, मैं ये कर सकता हूँ, you know. So when that buddy is working with you, he finds out those skills. We have a proper documentation of it. And then looking at those skills, he says, yes, he can be bookkeeper. He can read the balance sheet, he can be. Then he says, no, ये bore हो जाएगा, ये भाग जाएगा. Then we post you to the tax division, then audit, then payroll. So this is how, और कहीं ना कहीं तो जगह मिल ही जाती है. This is how it happens. Did that answer your question? That's all. Thank you. It was hope I could do the justice of taking your risk of attending my session. Definitely some rewards being a value addition of information you must have received. If that sounds interesting, be resilient, take up that, choose the career. I wish you all the best, a beautiful life. Always remember, wherever you go, the basics are dedication, determination, and discipline. Thank you.
Thank you, ma'am, for your enlightening session.
To express our gratitude, I invite student manager Ridhima Bhandari to propose the vote of thanks.
Thank you, Pragati. Thank you, Pragati. I, Ridhima Bhandari, student manager from Sri Balaji University, Pune, take this opportunity to express my heartfelt gratitude to our honorable guest, Mr. Hemal Vakil sir and CA Kavita Chakrabarti ma'am, for sharing their invaluable insights with us today. Your enlightening talk has undoubtedly broadened our understanding and inspired us to think differently. Mr. Hemal Vakil sir diligently talked about the history and evolution of banking, highlighting the merger and recent trends in the banking sector. Sir rightly quoted, banks may or may not be the future, but banking will continue. Further, CA Kavita Chakrabarti ma'am introduced about risk, reward, and resilience and the impact of globalization in finance and accounting. Additionally, she added the opportunities in finance for international business with her real-life experiences. Your suggestions to adapt the changes and stay agile means a lot, ma'am. We deeply appreciate the time and efforts you took to present such compelling sessions. We look forward to future opportunities to learn from you again. Thank you, sir, and thank you, ma'am.
I now request Dr. Sonali Manevan ma'am to kindly present a memento of appreciation and gratitude to CA Kavita Taparia ma'am.
I now request Professor Soumya ma'am to kindly present a memento of appreciation and gratitude to Mr. Hemal Vakil sir.
आपण जेवण करून निघू जेवणाचं करायला नाही माझी पर्स आहे देऊ का
We will now break for lunch. Student managers to kindly Welcome back after the delicious lunch. I hope I hope you had a great time festing. Well, the enlightening session doesn't end here, and there is more to today's learning. In the inaugural session of the Finance Conclave 2025, the esteemed guests emphasized the critical role of financial acumen in today's rapidly evolving economy. They highlighted how risk management, strategic investments, and financial resilience are essential for navigating economic uncertainties and global market shifts. We resume our conclave with an insightful session by Dr. Mayank Patel, sir, Head of Advisory Services, IB Grid Investment Advisory Services. Now, I request Student Manager Swapnil Kadam to introduce and welcome Dr. Mayank Patel, sir.
Good afternoon, ladies and gentlemen. I, Swapnil Kadam, student manager from Balaji Institute of International Business, take utmost pleasure in introducing our esteemed guest of honor, Dr. Mayank Patel, sir, a distinguished leader in the field of finance. Dr. Mayank Patel, sir, is a financial expert, investment strategist, and a business consultant with over 25 years of experience spanning banking, financial services, technology business incubation, and academia. He holds a PhD in management from Ahmedabad University, certified financial accounting from USA, MBA in finance, bachelor's in electrical engineering, and a PhD in treasury and foreign exchange management. His academic and professional interests include financial market, asset pricing, behavioral finance, risk management, and quantitative methods. Dr. Patel has made significant contribution to investment research, corporate finance, financial derivatives, and fintech innovations. As the CEO of Center for Advancing and Launching Enterprises, hosted by EDII Ahmedabad and IIPH Gandhinagar, he has mentored over 100 startups, building them in strategic financing, business valuation, and investment management. Currently, he serves as the head of investment banking at IB Grid, a fintech company based in Ahmedabad. And Dr. Patel sir is deeply engaged in geopolitical, political economy, and advancement in education, shaping the finance industry with his expertise in financial modeling, risk management, and strategic investment planning. With his extensive knowledge and commitment to the excellence, Dr. Mayank Patel sir continued to be a sought-after mentor and thought leader in finance sector. It is indeed a privilege to have him with us today. Please join me in welcoming Dr. Mayank Patel to the stage. Welcome, sir.
I will do that. And slide change would happen. You will be doing it also. Yes, sir. जेब में रख दूँ इसको? Yes, sir. You can hang it here also. ठीक. Ready? Yes, sir. Okay. Hello, am I audible? Great. Good afternoon, everyone. And I compliment the team of Sri Balaji University for organizing this fantastic event, Conclave. And I'm really delighted to be standing in front of you and talk about something which I think I have seen a lot. And don't say that I'm an expert on that, because nobody is an expert in this area, the area that I'm going to talk about. I'm going to talk about startup valuation. And I'm sure you have heard this word, startup, somewhere. And some of you may be thinking also of
having your own startup. So can somebody tell me what is a startup? How do you define a business? How do you term a business as a startup? What is a startup? So this is what happens when a teacher asks a question, the class gets silent. Yes, please. Okay, new journey. Okay. What else? New journey of a product could be a startup. What else? Yes, please. Finding a solution, this is what CA Kavita also said, right? Find a solution, that's a business. You had something else to say? Yes, please. Right. So innovation of what nature? What kind of innovation? So you are right. Either a technology innovation or a business model innovation is a startup, right? Selling, cab rides were there for so many years, but the way to organize the cab ride becomes a startup. That's a business model change, innovation. And there are technology innovations also, right? Completely new technology to do the same thing or new thing makes a business a startup. Now, why is startup valuation, which is the most visible aspect of a startup, right? Every day you will be hearing so-and-so startup has got such and such amount of valuation. And many questions, in fact, CA Kavita also had said, she is surprised how come the valuation of businesses be so bizarre. Even though the business is not generating money or not generating profit, sometimes the cash flow may also not be there. That makes startup valuation a very intriguing topic. How are they valued? How money is assigned to a solution which may have a technology innovation or a business model innovation, for which clients may pay, may not pay, clients have not been defined yet. Also, it is a possibility that market may not be there, products may not succeed, still the valuation may be there. So this is an interesting area to understand. So what I'm going to talk about, I have shown you here, is also how startups are valued, how investors, professional investors, people whose sole job is to invest in startup, make money out of that, and succeed in doing that in a professional way. How do they value these businesses, these startups? Can we have the next slide? Startups generally have 4 stages, if you see it. Startup could be at idea stage, or a seed stage, or early growth stage, expansion stage, and the 5th stage, which also sometimes overlaps the 4th. That's why I said 4 stages, or sometimes it is 5 stages also, is the sustainable growth stage. Now, based on the characteristics of this stage, the valuation methods would be different. At very early stage, at an idea stage, the startup is germinated in the mind, in the thought process of the founder. There is no proof of concept, right? I want to suggest some solution, but I have not demonstrated whether that solution that I am suggesting works or not. So there is no proof of concept. Concept is not proven. Since there is a technology innovation or a business model innovation or both sometimes, there is no historical data available of that problem being solved. Sometimes even the problem is also new. No historical data there is no forecasted data. And cash flow is negative. Cash flow is negative because cash is burned for finding out whether a technology solution can work, to work on the innovation of the technology, to work on the business model, recruit people, check with customers what is their requirement, whether the business will be able to sustain or not. All of this leads to cash flow negativity. Cash flow is negative. You don't generate cash. There is a burn. Cash burn is also a term they use very frequently. At this stage, valuing a business which is losing money, whose clients are not determinable, not defined well, whose product also is not clearly made up, services are uncertain, market size not known, still the businesses may have potential. And based on the potential, a value is assigned. At this stage, valuing a startup is a very challenging task. But still there are investors who is interested in investing in these businesses, this kind of activities. Why would an investor invest in this kind of activities even though there are a lot of uncertainties? Why somebody would invest? Any thought, any question on that? Why somebody would invest in an idea? Why do, yes please. But most of the investors, I tell you, they don't acquire majority equity. They acquire very minority equity. So let's say if I am a venture capital fund, I hope you have heard this term, right? Venture capital fund. Great. I'm a professional investor, I'm a venture capital fund. My sole job is to invest in startup. They do not acquire majority equity at startups which are at idea stage, seed stage. In fact, the maximum equity that they acquired would be around 15%, 15%, not majority, right? Then why should they invest? If not majority, then why should they not? Why should they invest in the business? Return is one aspect, but the risk also is very high. बैठ के venture capitalists generally give money. They sometimes try to give expertise, but rarely. Why? So it's like trying to find a diamond in a coal mine. You have to shuffle through a lot of tons of coal before you come across one diamond. So shuffling the tons of coal is an activity. That's why they invest. Any economy, if they want to, any economy, any nation, if they want to grow fast for a long time, the growth cannot come without technological innovations. Technology innovations makes life possible, easier, better. And there are people ready to pay for that better life. And that payment makes it a business. And if it is a business, there is a potential return sometime in future. So somebody, so have you heard this company's name, Naukri.com? I'm sure you would have heard, right? You are going to look for it few months down the line, or 1 or 2 years down the line, right? Who is the founder of Naukri.com? Any idea? Naukri.com, who started this company? You can check online. Who is the founder of Naukri.com? He has founded a university also. Yes, please. Sanjeev Bhikchandani, right? After founding Naukri, he invested in another company in 2010. He invested 75 lakh rupees for this company in 2010. And when this company went for IPO, some 2.5, 3 years ago, that 75 lakh rupees became 15,000 crores. The name of this company was, or is rather, Zomato. 2010, who had thought that services like Zomato or Swiggy will be such a success? A team which was working on this idea that we can deliver food to homes in 2010 is a different world. If you look at it, 2010, what was the mobile telephony generation that was working? Right now we have 5th generation, 5G mobile telephones, right? In 2010, what was the mobile telephony generation? 2G. You had mobile phones, but they were not smartphones. Without smartphone, you cannot have app, right? 3G was not there. 3G came few years down the line. How can you order without app using a smartphone? But a team was working to give this solution. They were much ahead of the time. And there was a person who were willing to take risk of investing in that team. He took the risk, that team succeeded, and he got return. The same person, Sanjeev Bikhchandani, invested. So what was the problem at that time? When team was working on Zomato's concept, there was no proof of concept. There was no historical data that Indians will order food at home. There was no forecasted data. Cash flow was negative. Why? Because all the employees were paid salary. They had a rented premises, they were working on the development, so hosting cost, development cost was there. Still somebody invested it. The same person, Sanjeev Bikhchandani, invested in another startup. It was an edutech startup called Merit Nation. I'm sure you have not heard of it. Or has anybody heard this startup's name? Merit Nation, very good, few people. What was the business of Merit Nation, any idea? Merit Nation, what was the business? Merit Nation was earlier version of Byju's. I'm sure you have heard Byju's. Byju's gives you education online, right? Merit Nation was doing the same thing. But Merit Nation was much ahead of its time. Kya? But their model was not a classroom model. Their model was online. Online education in an era when there was no 3G, no 4G, videos were not streaming, was a big thing. Somebody's work. That investment actually failed. They didn't get any. Sanjeev Bikhchandani did not get anything in return. The entire money that he invested was wiped off, was written off in accounting terms. What was it? Most of the startups that gets investment results into this kind of situation. Still they get money. Still they get investment because of the potential that they have. Byju's came much later. Byju's came in an era where 4G was already there. 3G, 4G was there. YouTube was known. People had mobile phones, smartphones, sorry. Let me use that word, not mobile phones. And that made Byju what it is, and many others what it is. What was the issue? Same problems. Second stage for a startup again is seed stage, where proof of concept is proven, solution through the technology innovation or business model is demonstrated, but there is no historical data. You have just started working. Forecasted data is possible, right? So at some stage, Zomato can show to its investor that, look, some Indians who are earning very well, who are very busy, who don't want to run the kitchen, would like to invest or like to buy food on Zomato. If restaurants can be brought on Zomato, they would not like to even go to the restaurant and eat. For them, we can give a solution. For them, we have a business. At this stage, there are three valuation approaches which works. Something called fixed range valuation. Another is cost approach, and third method is scorecard-based valuation. These three valuation approaches are used in valuing businesses, startups at this stage. Once a startup crosses these two stages, it has reached a certain milestone. It's a fantastic proposition, right? You have proven your idea, work on it. Now your idea has potential market. People may be ready, willing to pay for it. This willingness shows that there can be a business proposition, large business can be made from this. At this stage, the proof of concept is proven. There is a limited historical data available with an investor to look at the valuation. There is a limited market validation and forecasting of market is possible. This is the stage of early growth. At this stage, startups turn from negative cash flow to positive cash flow. This is the stage which is a transformational stage for a startup's journey. At this stage, startups are valued the most. So most of the investments that you see in the news for a startup would be in early growth, expansion, or sustainable growth phase of startups. At this stage again, the method that is used are not same as the methods that we see in the earlier two stages. Idea or seed stage methods are different. Early growth, expansion growth stage, the valuation methods are different. The valuation method generally looked at here based on the nature of the investor, who are generally the venture capital funds. The method is suggested to be venture capital method. So Dr. Rashmi Mahajan said, that there will be a quiz you will be having 1 week down the line based on the discussion that we have in this conclave. So believe me, my portion is going to be the most relevant portion for the calculation orientation of the quiz. You will see one example. I'm going to show you how actually with numbers, venture capital fund method is applied for valuing startups. The next stage is expansion stage. At this stage, company has already been selling its products or services, but the scale of sales increases very fast. I'm sure you know something called Zepto. Have you heard of it? What is the monthly growth rate of Zepto services or expansion? Any idea? In numbers, how fast is Zepto growing monthly? Month on month, how many new customers are added by Zepto? Please check online. Tell me, how many new customers are added by Zepto every month? What is the percentage growth rate? 50 to 60%. Now, if that number is converted into annual terms, how many new customers are added every year? If 50% growth is there in month-on-month term, what is the annualized growth rate? 120%? If it is 50% monthly, it is 120% annually? No. If you simply multiply it by 12, it will be 600%. I'm sorry? Please tell me, in annual term, what will be the growth rate? If the monthly growth rate is 50%, how much will be the annual growth rate? Annualized growth rate. If 100 customer becomes 150 customer in 1 month, another 50 customer added, 200 customer in the second month. After 1 year, how many customers would I be having? 50% compounded annual growth rate monthly. Sorry, compounded growth rate monthly, not annual. Kitna? 13,000 new customers added. it will be more than 600%, right? 50% month on month. Compounding किया आपने, तो annualized में कितना होगा? 13,000. What is the consequences here? You are multiplying your cells by humongous exponential rate. कितना rate होगा? आपका cells अगर 1,000 है, if the growth rate is 13,000%, what will be your sales after 1 year? 1,30,000, right? Look at the growth. This is the expansion, exponential expansion. This is how Zepto has grown. And that is why if you look at it, in this expansion phase, last year, in the calendar year 2024, Zepto has raised more than $500 million at more than $5 billion valuation. The growth rate determines the valuation. Venture capital method will be applied at this stage. At this stage again, when the company is growing very fast, this growth rate cannot be sustained for long. You cannot grow at 13,000%, perhaps it is correct, I hope it is, year on year. At some stage, the entire population of India will become your client, and then there is no growth left, right, if you don't go outside India. At that stage, the growth will become stable, or the only growth will not be from the new customers, but the existing customers giving you more business. At this stage, expansion stage, if you look at it, the proof of concept is proven. Everybody knows how Zepto performs, how it works, how it operates. There is a fantastic good quality historical data and good quantity of historical data. You have 4 or 5 years of history to look at company's performance. You have reliable forecasting data based on history. You also have a situation where quickly the company will be having positive cash flow. And this cash flow generation activity also will accelerate. The generation of cash flow would increase. In the last phase, where the company can be termed as a startup, is a sustainable growth phase. Beyond this stage, the business will not be termed as a startup. It will no longer be considered as a startup, right? A Flipkart cannot be said to be a startup. It was a startup some 14 years ago, not now, because it has come out of all these phases. At this stage, the change that comes is that the cash flow starts, the growth rate of the cash flow starts declining. There is an acceleration in the cash flow growth. For both these stages, the methods that is used is discounted cash flow methods, or in the last stage, the sustainable growth phase, market multiples method is used, where what was the valuation that a similar business at similar stage got, that multiple will be applied to the startup that you are valuing. So these are the phases, characteristics of the phases of the startups, and the valuation approaches, which varies according to the phase for startup valuation. Can you please change? So if you look at it, somebody said high risk, there is a possibility of high return. Return expectation for investment at different stages would be very different. At a very early stage, at idea stage, there is a highest risk. The possibility of failure is very high. Return expectation also is very high. An investor who is investing at this phase would be easily expecting to generate 50 to 85% of return annually. I hope you know something called the rule of 72. You know this? What does it say? Rule of 72. What does it say? How much time it takes to double your investment? If the return is 50%, how much time it will take to double your investment? If the return is 50%, how much time will it take? 1.4 years, right? If you stay invested in a company which is successful, a startup which is successful for 6 years, which is the average investment period for any venture capital fund. In that 6 years, if he had invested at idea stage with a return of 50%, and if he invests, let's say, 1 crore rupee, what would be his investment value at the end of 6 years? How much 1 crore investment will grow in 6 years at the end of, sorry, with the rate of 50% return? Kitna hoga wo? Please tell me, you are all students of finance, right? You all have smartphones. Please tell me, 5.69 crore. I hope the calculation is correct. Nearly 6 crore. 6 times is your investment in 6 years, right? Are you sure? Or it will be more? 50%. So 1 crore multiplied by 1 plus 50% to the power 6, right? 1.5 to the power 6. So 1 crore invested will grow to, so that's what I was wondering. You missed one lace, right? 11.39. So your money gets multiplied by nearly 11 times or 12 times in this time phrase. Look at it. If you have invested 5 crore, it will become 60 crore. This is what is the risk. But if I take it the other way, a typical venture capital fund nowadays has a size of around 350 to 400 crore. They aim to invest in 20 to 25 startups with expectation that out of this 25 startup, one startup would be half a unicorn. You know this word, unicorn. What does it mean? A billion-dollar valuation company. So when a venture capital fund in India is investing, they aim to invest in 20-25 startups with hope, or their entire analytical force invested in a situation that at least one turns out to be half a unicorn. That means the valuation of 500 crores, 500 millions in US dollar terms, right? They will invest out of this 400 crore or 300 crore, they will invest 40-50% in businesses which are at idea or seed stage. Why they will invest only 40-50%, not the entire corpus, is they keep the remaining part of the corpus to invest in the same startup at early growth, expansion, or sustainable growth phase, because the money will be required later on also. Out of the 25 startups that they have invested, some 10 startups would need fund in early growth, expansion, or sustainable growth also. So in the first tranche, they may be investing 5 to 6 crore in a business, but in the second tranche, they will be investing more than 15 crore in the same businesses. In the first stage, they will be taking a stake of around 15% or less than 15%. With each round of fundraising, their stake will decline, not increase, because more and more investor comes, existing or previous investors' stake gets diluted. But the valuation of whatever they are holding keeps on increasing. At later stage, seed stage, the risk becomes less because the company has already passed the idea stage. It will move. It has proven a lot of things. Market may be there. Hence, the risk is less. Risk of investment is less. The return expectation could be in the range of 40 to 60%. The return expectation declines here because the risk also reduces. The third stage, return expectation moderates further. From 40 to 60, it declines to 35 to 50. In expansion stage, it declines further with each round of investment. With each phase of growth, there is a decline in the return expectation. And in the last phase, the sustainable growth rate, the returns would reflect the market returns. That means the returns from broad-based index like Nifty or Sensex. And at this stage also, the company thinks of coming out with an IPO as well. Sometimes IPO is thought earlier as well, right? But absolutely, most of the investors who have invested at early stages will get exit late through IPO. So I hope you understand the return dynamics. This is also the discount rate that is applied for valuation. Can you please change? When we look at the approaches that is used for valuation at idea or seed stage startups, three approaches I talk about: fixed value approach, cost approach, and the scorecard based valuation. If you take further, fixed value approach is something like take it or leave it. The investor knows the risk of investing. Hardly anything is proven, only the idea is there. They also look at the quality of the team, the quality of the founder, right? What is his background? Where has he studied? What is his work experience? Does he have the capabilities to make the idea a successful business? The entire valuation is based on non-numerical, non-number-based parameters. Valuation generally offered would be in the range of, nowadays, the valuation that is offered is in the range of 3 to 5 crores. There is no negotiation. If the founder likes this valuation, investment happens, or he can find another investor who may agree with his valuation, which would be higher than 3 to 5 crores. At this stage again, a fixed range of capital is offered for the equity. In many cases, at this stage, no valuation is also decided. A simple money is offered, simple investment of 1 crore, 2 crore, or 50 lakh is offered, with a condition that when the next round of investment happens, valuation will be done in the next round, and the first round investors will get a discount on the next round valuation. Discount could be anywhere, 20%, 30%, 40%, or 50% also, depending upon how quickly the next round comes. If the next round comes in 1 year, discount would be less. If the next round happens late, discount would be higher for the investors. So this is a fixed range valuation. The next approach is cost approach, right? In this case, the startup is valued simply as whatever is the money spent to bring the business up to a certain level. So let's say the team has worked for 1 year, 18 months, and in this period, the total expenditure or investment that has happened is 2 crore. Startup founders do not receive any salary. Their salary is also added for valuation, and their salary is, let's say, another 30 lakh rupees for these 2 years or 18 months. Then the valuation would be 2 crore 30 lakh rupees. A simple mathematics is applied. Nothing is done except addition of the cost. This is also the replacement approach, they call it. Here, the approach covers the cost incurred to reach or to bring the startup up to the idea stage or the seed stage. Another approach is something called scorecard-based valuation approach. In this approach, there are various parameters which are looked at by the investor. Investor looks at what is the quality of the team, what is team's cohesion, what is the intellectual property or the technology involved in the business, what is the level of development of that. So there is a term called TRL, technology readiness level. There are 10 different technology readiness level, right? When the technology is used in making some product or service, that is the highest TRL level. This is commercialization of the technology. Investors look at the technology also. They look at the product. They look at market and growth potential. They also look at product proof of concept, whether it is there or not, and whether the minimum viable product, this term also you may have heard of it, right? This is the first version of the product or services. Is it ready or not? Score is given to each of these parameters. And based on the score, the startup's valuation is done. I will show you. Another method is, which is generally applied for early growth, expansion, and stages, is something called the venture capital method. Generally, the professional investors, institutional investors, invest in startup at this stage, early growth, or sustainable growth. At this stage, the investors generally are venture capital funds, hence the method that is proposed is also called the venture capital method. What happens is in venture capital method is, I have taken a simple example, right? Some valuation is imagined in future and the discounting time value of money concept is applied. I hope you are familiar with this also, right? Time value of money, the first thing that we learn in finance class. What is generally believed, as I said, right? The average investment period for a venture capital fund would be 6 years. The life of a venture capital fund generally is 10 years. They get 10 years approval from SEBI, regulator, to float the fund. In the first 2 years, they raise money from their investors. They mobilize fund from their investors. Simultaneously, they start also identifying startups to invest into. Once the investment completes, first 1, 2, 3 years, the investment fund is mobilized, investment is done. Then they let the crop grow. They let the startups grow for next 4, 5 or 6 years. So by the time of 8th or 9th year of the venture capital fund's life, or by the time of 6th, 7th year of the investment's life, they are ready to harvest their investment. That means they are ready to exit from their investment. That's how the average investment time period for a venture capital fund would be anywhere from 5 to 6 years. They will not invest more than that, right? They have to return the money to their investors. So they will like to exit from the startups. So when this method is applied, it is generally in multiple phases of investment or in one stage of investment. And they consider that, look, if the startup that I have invested into, if it becomes a unicorn or a half a unicorn, what will be its valuation 5, 6 years down the line? And they take a reverse approach. So I have taken here with some numbers. Let's say a venture capital fund has evaluated a startup called Startup Private Limited. And this fund believes that 5 years down the line or 4 years down the line, when the exit happens, the startup will be valued at $25 million US. And the exit will happen 4 years down the line. So in this case, startup is also looking for an investment of $3 million. Would be around 25, 26 crores, right? Which is generally considered good for early growth or growth phase. What is the discount rate or the return expectation we have? Generally close to 50%. So I have also taken the same number. Now if this is the case, what will be the stake that the venture capital fund would get? What will be the per share price that the venture capital fund will have to pay? And we also consider that, let's say the company, the startup has 1 million shares outstanding. So the question is, what will be the stake that the venture capital fund will get? Not the majority, but how much? And for each share, how much would they pay? So if you can go to the next slide. So the first step is to calculate something called post-money valuation. Post-money valuation is valuation of the company considering the money has been invested. Post-money valuation is nothing but the terminal value or the value at the time of exit divided by 1 plus the return to the power the exit period. So here V is the terminal money, terminal valuation, R is the discount rate or the return expectation, and T is the time period. Then based on that, once post-money valuation is calculated, company, the venture capital fund calculates something called pre-money valuation. That means the valuation of the business startup before the money is invested, before the investment is done. That is nothing but the post-money valuation minus the investment amount. What is the investment amount we are considering here? What is the investment the startup is looking for? 3 million. What was the valuation that is considered at the time of exit after 4 years? 25 million, right? What is the time period of investment? 4 years. Keep this in mind. What is the discount rate or return expectation? 50%, right? Then this is used to determine, the third step is determining what will be the fraction of the ownership, the stake. The stake would be again the investment divided by the post-money valuation. Once the stake is determined, the number of new shares that needs to be issued to the venture capital fund, the investor is calculated, and based on that, the price per share is calculated. So if I put values in this equations now, go further. If you put values in this equation, the terminal value is 25 million, time period is 4 years, discount rate is 50%. What will be the post-money valuation? Go to the previous slide. One more, right. So what was the post-money valuation? 25 divided by 1 plus 50% to the power 4. 4.93 is the post-money valuation, right? If the investment is 3 million, what will be the pre-money valuation? 4.93 minus 3, 20.6. 1.9. यार क्या हो रहा है तेरा मैथमेटिक्स क्या है? Please check. 25 million divided by 1 plus 50% to the power 4. 4.93 or something? 93. That's the post-money valuation, right? Pre-money valuation would be 1.93 considering the investment of 3 million. What would be the stake that the company, that the venture capital fund will get? Very high stake, 3 million divided by 4.93. How much would be the stake? 60 exact hai? 60.85% is the stake, right? The company has right now issued 1 million share. That 1 million share will be 1 minus 60.89% stake. So how many new shares will be issued? If 1 million share is 39 point, कितना share होगा? So 100% minus 60 point कितना था? 60.89, right? That is 39.11% will be the founder's stake. So if 39.11% comprises of 1 million share, how many new shares requires to be issued? Please calculate. This is part of your quiz. How much? How many? It will be 15 lakh. 1 million hai originally, not 1 lakh. Right? 15 lakh 64,000 new shares will be required to be issued. And if the total investment is 3 million, what will be the price per share that the fund will pay? 3 million divided by 15 lakh something. So what is the price? No, it will be less than $2. $1.9. That is the price that the fund will be paying. So this is how the one step venture capital fund calculates the stake and the price per share that they pay. But as I said, in many cases nowadays venture capital fund invest in multiple stages. At least 2 stages of investment they will do. Perhaps they may not do the 3rd stage of investment because by that time the fund's life may have got over. So in those situations, the fund will have provisions to invest later on also. Generally, a good startup, fast growing startup will require money in 2 to 3 years. Anywhere from 24 months to 30 months, they will need money again. That's where multiple stage of investment planning has to be done by the fund as well. That is why we will look at multi-stage or at least 2-stage venture capital fund method. Next. So I'm now introducing the same numbers, but the investment is done in 2 stages. We also believe that currently, where we are standing 4 years down the line, the valuation of the startup would be less at 25 million. Right now, the first round, I1, the first round of investment is 3 million, second round of investment would be of 2 million. But the second round of investment will happen 2 years from now. That means after the second round of investment, there will be 2 more years of investment. After the 4 years total, the valuation will be 25 million. Discount rate, if you look at it, for the first round is, let's say, 50%. The risk is more. Discount rate for the second round would be less, because in the second round, the risk has declined. Hence, the return expectation also has to be moderated, has to be declined. As I said, first round investment will happen right now. Second round investment will happen 2 years from today. So total investment will be 4 years, right? Now this is more complicated. You have to calculate stake 2 times. You have to calculate the share price 2 times. And you start with the end in mind. So all venture capital funds, when they are investing in a startup, they have exit in mind. They have never like a thought of Warren Buffett that they will stay invested in a good company forever. They don't have like that. They say that we have exit in mind. We would like to exit at the end of 4 years, 5 years, 6 years, because they have to return the money to their investors, right? In these circumstances, the challenge is more quantitatively, calculation-wise. If you go next. Here we start with the terminal value at the end of 4 years. We calculate the value at the end of 2 years and go back further. So the value, if you look at it, we have to calculate 2 times the post-money valuation, 2 times the pre-money valuation, because there are 2 rounds of investment. Each time, we'll have to calculate the stake again. And in each situation, we will have to find out what is the per share price, right? Now, if we consider 25 million valuation after 4 years, and second round of investment happening after 2 years, that means after second round of investment, another 2 years of investment will be there, 2 years of investment horizon. So the discounting rate for the second round, as I said, would be lower than the 50% discounting rate of the first round. What discounting rate do you think will be appropriate for the second round? 30? Okay, let us consider it to be 30. So if we consider second round of investment happening at 30% for 2 years, after 2 years of which 25 million is the valuation, what would be the value of the company after 2 years when the second round of investment happens? It will be simply 25 million divided by 1 plus 30% to the power 2. And now this time I expect you to be right. How much? 14.79, great, right? So 14.79 is the valuation of the company after 2 years. And after 2 years, we are investing $2 million, right? So what will be our stake? 2 million divided by 14.79. How much would that be? How much would that be? 2 divided by 14.79. How much would be the stake? 13.52% will be the stake in the second round, right? Now, second round post-money valuation is, we have calculated 14.79. 2 million is the investment. So the pre-money valuation would be 12.79, right? This 12.79 will become the post-money valuation for the first round, right? Which is also of 2 years. So 12.79 discounted at 50% for 2 years. What will be the post-money valuation for the first round? That will be the post-money valuation, right? So 12.79 divided by 1 plus 50% to the power 2. 5.68, great. Thank you very much. 5.68 is the post-money valuation for the first round. And in the first round, we are investing 3 million, right? What will be the pre-money valuation for the first round? 2.68. And what will be the stake in the first round? 3 divided by 5.68. 52.84, right? In second round, it is around 14%, right? That's how the calculation will go on, right? So if you can go to the next. The shares to be issued in the first round. What is the stake that we are diluting? What is the stake that is there for 3 million of investment? 3 out of 5.68? 52.81. When the founders approached the fund for investment, 1 million shares were outstanding. Now those 1 million shares will become 47.3. So how many new shares will be issued? 11,19,000 new shares will be issued. Am I right? And the investment is 3 million. So what will be the per share price? 3 million divided by 11,19,000. कितना आ रहा है? 2.8. कितना आ रहा है? 2.68, sorry, not 8. So 2.68 will be the per share price in the first round. In the second round, how many shares will be outstanding? 1 million earlier plus 11,19,000 more, right? So how many shares are outstanding in the second round? Some 21,19,000 shares, and those shares will become 84%. कितना था dilution in the second round? 14 point something? 78. So what remains is 85.22. So 21,19,000 shares is 85.22. So how many new shares will be issued in the second round? Pretty technical, pretty calculative, right? How much new shares will be issued in the second round? $21,90,000 shares comprises 85%, 85.22%. So how many new shares? This, kitna? So 3,53,000 new shares has to be issued, and for which the investment would be 2 million. So what will be the per share price? 2 million divided by 3,53,000? 5.6. What was the per share price in the first round? 2.68. Now it is 5.6. The valuation has increased per share. Company's valuation also has increased. So this is the venture capital fund method, which is applied in multiple stage of investment. Pretty complicated, but if you look at it, it's nothing but the multiplication, addition, subtraction, and division. Can we go next? Next. इतना नहीं है. Okay. Can you go to the second one? Second slide. Yep. The other method is something called discounted cash flow valuation, DCF. How, I'm sure some of you would have heard it. How many of you have heard it? Great. This is the most popular, most visible method. But for this method to be working well, the company's cash flow has to be positive. You cannot apply it without that. You have to make few years of projection of the cash flow, discount it at, what is the discount rate you use? Weighted average cost of capital or cost of capital, either way, right? You apply that, assume what is the terminal growth rate, find out the values. It's easy, not big deal. And the last method is market multiples method, where you use the multiples like price to sales ratio. Have you heard of this? Price to sales. Price earnings you would have heard. price to sales, price to cash flow, EV by EBITDA. These are the methods generally applied for valuing startups at sustainable growth rate. So these are the valuation approaches used. But most of the time, when the startup is growing very fast, one approach, which is multiple based approach that is widely followed, is something called price to sales approach, where simply the multiple is applied to the sales of the company to arrive at the value of the startup or the company. So this is how venture capital funds, investors value startup businesses. I will be happy to take any questions if you have. Otherwise, there will be questions in your quiz anyway.
The floor is now open for question and answers.
Yes, please. Yes, generally it is applied. For that only, it is applied. Because loss-making startup doesn't have any cash flow, negative cash flow. Sales would be reliable number. They use price to sales multiple to value the business. But provided the sales is growing fantastically high, if the sales growth rate is very slow, it is not applied. Yes, please. Okay, valuation challenges in the early growth startup is the data is not reliable. Market may not be proven. The team is not proven. The team which is coming up with the business is not proven. In those aspects, whatever the numbers are looked at, it becomes unreliable. So the valuation that you arrive at becomes highly risky, not reliable at all. So at early growth stage, idea stage, seed stage, it is the persons who are coming up with the startup, their education, their background is generally seen, and what is the market potential for that solution, that is generally seen in valuing the businesses. So if you look at it, do you know what is the age of founders of Zepto? The oldest founder of Zepto is, I think, 23-year-old. They have, do you know they dropped out of Stanford? They decided not to pursue their education in Stanford and work on the business idea. They feel that that is more educative than pursuing Stanford education. That was one of the bases why they got the valuation, right? But besides that, there was a market potential also. The people who were advising them also mattered. So this is a big challenge. Yes, please. Burn rate generally do not affect the valuation. No, that is not like the case. The nature of burn is looked. Where are they burning the money? Is the founder burning the money in buying a big car for himself? Or is the founder burning the money in developing the technology, or developing the market, or expanding the market? What is the nature of valuation burning? In some cases, cash burning is considered good if it is expanding the market or bringing better solution to the market, more iteration. But if the cash burn is for the founder's benefit, then it is not considered good. So it's no direct thumb rule that always good or always bad. the nature is looked at. Yes, please. Infrastructure industry. Can you give a specific example? Because I feel, will infrastructure industry come into startup? So that's why I'm asking, any specific example if you can cite? Generally, cement companies are valued based on the production capacity. If there is a 1 million production capacity, certain valuation is assigned by the market itself based on the multiples. But the cement company itself will not fall into a startup category, because hardly there is a technology innovation, there is a business model innovation, right? They will be falling more into sustainable businesses. So they will be valued more on discounted cash flow basis or market multiples basis. So what they will do for the cement company, right? They will estimate how long will it take to commission the plant. Perhaps it will take 3 years to complete the plant. So there is no cash inflow for the 3 years, but investment in the plant, in machineries, investment in people also, salary is considered as investment. Then subsequently, they will forecast for how many years the plant will function. It can be, let's say, 20 years, 30 years, or 10 years, whatever, right? Generally, it is for very long time. They will forecast the cash flow for next 30 years. Then they will say, what is the composition of capital? How much equity, how much debt? If equity is taken, what is the cost of equity? If debt, what is the cost of debt? They will work out the capital cost, apply it to the forecasted cash flow to arrive at, that's a DCF method, and market multiples method. Generally, the venture capital fund method would not be there. But private equity funds, which are bigger version of funds, they will generally be interested in investing in this kind of businesses. They will look at terminal value calculated based on market multiples or DCF, and then invest in the business with stake negotiated. Yes, please. Right. So there is nothing like one is better than the other. There is nothing like one can be applied to one sector of startup and another can be applied to another sector of startup. These methods are actually dependent on the perception of the investors. At this stage, investor is the ruler. Investor has commanding position, right? So investors generally will say, okay, I am valuing your startup at 3 crore. I am investing 30 lakh, 10% stake. You want to give it, take it, or else find a different investor. So Nirma University used to run an incubation center some 15 years ago. Their model was very simple. It was a fantastic model. That incubation center was called Nirma Labs, founded and supported by the family of Nirma Limited. Their model was simple. If you approach them with your business idea, early stage, if they like your business idea, if they like you in terms of your background, they will simply say, some 15 years ago, they will offer 10 lakh rupees investment for 10% of stake. It was a fixed valuation. And this was applicable for all the startups, which they like. No difference. So this is a fixed range valuation that they were applying. But today, if you look at it, there are multiple grant schemes, investment corpus available to incubators where they negotiate different. But most of the time, valuation of early stage startup, idea, seed stage startup do not exceed $1 million. And the investment generally happens in the range of first stage, around 50, 60 lakh or 1 crore. So you can see, because the India has grown, startup is very well known. Earlier, what Nirma Labs used to charge 10%, ask for 10%. Now it has become somewhat less. So that's how it works. In case of SaaS, software as a service kind of a business is, if the founder wants to exit, a multiple is also applied. If the business, I have seen, we advise one business for getting acquired. The startup was struggling in SaaS industry. The acquirer simply said he is willing to pay all the expenditure that has happened in 4 years to bring the startup at a certain stage, plus the market salary for the founders. Cost approach, he was willing to pay. They agreed to the cost approach and the startup got acquired, with the founder being retained as professional employees. Absolutely. So this is how it works. Yes, please. So I tell you, we see a lot of startup presentations for investment. Most of the startup then they present to us, they will say there is no competition in my business, right? That's wrong. It can never be a situation that there is no competition. That's a red flag. That shows me that the founder or the presenter of the startup has not done enough groundwork to find the competition, analyze the competition, right? That shows me that he is not diligent in his work. That's a red flag. Second is, because of the circumstances, startups are too optimistic. Their growth pattern is infinite growth forever at a very high growth, which is also not possible. They also say that their product or services is unbeatable, or they are the best. So they will do a competition analysis on 10 parameters. On all the 10 parameters, their own product will be top, and competitors' product will be somewhere at the bottom or middle, so some scores will not be there. That also shows that they have not realized the struggle to achieve the perfect score on 10 parameters for a product or service. That's a red flag. These are the few, 2-3 red flags that generally I try to check and avoid. Green flags. The base green flag is when startup founder comes with fantastic education background and work experience. And he suggests a solution for that. So when somebody has, for example, PhD in biotechnology, has worked with a large pharma company for 10 years, he comes with a startup idea based on technology innovation. I'm happy to look at it because the background and potential idea, and his ability to execute that idea, convert that idea into business. That's a green flag for me. Yes. So there are various methods for giving weightage. There is no thumb rule. I have not come across any scholarly literature or any publication by the actual investors which gives that, look, this is how it should be done. So there is no one fixed method for that. Yes, please. At what stage? Precedent? Generally, it happens in the expansion growth stage, fast growth stage. How is? I really don't know. Sorry. Any other question? Thank you very much.
Thank you, sir, for your valuable insights. We will now take a small tea break. Students, please note that tea is served on the third floor. For the girls on the left side and for the boys on the right side. The tea break is for 10 minutes only.
Welcome back after the refreshing tea and networking session. Our final session feature Mr. Chetan Kuknor sir, Vice President at Digital Adoption and Portal Enhancement. I would like to request Dr. Shubhra Anand ma'am, Balaji Institute of International Business, to kindly welcome Mr. Chetan Kuknor sir. I request Student Manager Sakshi Agarwal to kindly introduce and welcome Mr. Chetan Kuknor sir.
Thank you, Pragati. Good afternoon, ladies and gentlemen. I, Sakshi Agrawal, student manager from Balaji Institute of International Business, take esteemed privilege to introduce Mr. Chetan Kukunor, sir, who is currently serving as the Vice President of Digital Adoption and Portal Enhancement at BNY Mellon. Sir is an MBA, Finance from VTU, Karnataka. With over 13 years of expertise in integrating business process and technology, Kuknor sir has been instrumental in driving digital transformation within the financial sector. He has successfully led multiple high-impact projects, including the migration of a self-service tool for the US transfer agency, catering to a database of over 301,000 active users. His innovative approach has also led to the design of global metric tool for US transfer agency business review, covering critical business-specific attribute to represent unit costing. In his current role, Kuknor sir is spearhead digital adoption strategies, collaborating closely with the stakeholder to enhance operational efficiency. His experience spans diverse domains, having served in key positions such as product manager, business analyst, and financial analyst across reputed organizations, including Accenture and eClerx. Throughout his career, he has demonstrated a deep understanding of process automation, business strategy, and digital integration, making significant contribution to the finance and technology sectors. Please join me in welcoming Mr. Chetan Kuknor sir to the stage. Welcome, sir.
Okay, so everybody settled? Awesome, Zabardast. So it's actually a pressure, right, once you start a session, after a break, after lunch break and all that. So, better now? Help me, sir. Hello, hello. ठीक है, sir. Okay. All right. So I thought थोड़ा pressure sir ने relieve कर दिया. So now you guys are little okay, ठीक ठाक लग रहे हो. So I thought थोड़ा और bore कर देते with lot of theories and concepts. तो और मजा आ जाएगा, है ना? So let me just tell you little bit of it. What we would be more over covering, right? We would be talking a little bit of these concepts ki where are we going to relate, right? You heard such a 3 pages of my introduction, but itna bhi cheeze, when you try and work in an organization for a longer time, you tend to touch multiple points in the businesses. And when you are working in a company which is moreover investment management, business management, custody services, investment banking, so यहाँ पे horizontally चीजें they start connecting each other and you tend to touch most areas of the business, right? And one prime area that I've been primarily focusing on is digital transformation, business transformation, digital adoption, right? And when we take these big words, what comes in your mind? That there is a lot of risk involved, there is a lot of frauds that's connected, and there are several case studies we have of what's happening on this fraud and so on, right? But let's relate it to what actually they are, because we studied all our concepts, right? Some Agarwal, ABC and all. Once you open this book, you have all these concepts. How do you relate it? That is something we'll try to understand. Okay. So based on some of the concepts, and if I would be able to relate those towards what we have in our digital transformation business today, okay, and what takes to be successful in a digital transformation business, and how these primarily elements would impact us during the course of business, right? We'll spend some time in understanding those. So mota sir, this will be a package what you will be getting to know in next few minutes. Fair enough? Yes, no, don't know? Yes, okay. No, any dropouts? There to they slept only. Good morning. At least I saw few nods here, there to no nods also. Here, I'm here. Okay, let's continue. I just gave you an introduction, so let's skip to the introduction. Let's go to slide 3. Right. So I think this is visible. I'll not read the entire text, but I would want to cover these individually as the topics they are, right? So let me talk about strategic risk, operational risk, credit risk, liquidity risk, and technological risk. I'll directly jump to technological for now, and then I'll cover the other ones, right? So when we are using several tools, right, digital platforms, or for example, if we have any of the services that we are closely working with that are technologically advanced, right, first thing that you would see is there is very high scope that the technology would fail, right? 10-20% failure understood, right? Then we call it as business continuity failure. 10-20% is understood. At some point of time today, just because ABC company, let's say today Deutsche Bank has started a technology, I come into pressure because I'm a very close competitor of the business. I want to start the same kind of businesses today, right? Am I ready to take it up? Am I ready to invest into it and also run it and maintain it? It's something which I am not very certain. Just because I know that is a kind of investment that I had to do, I end up getting into it. So that's one of the primary risks we have seen, and there's several failures also, like around 70 to 75% of the businesses fail just because of these less ability to maintain the technologies, right? So that's the reason I just wanted to touch base that. We'll talk a little more with the concepts and examples and all, I'll tell you, right? Strategic risks, operational risks. Everybody heard about example of Vijay Mallya case? Yes? Anybody who doesn't know who is Vijay Mallya? I'm not looking at boys, please. Anybody who doesn't know who is Vijay Mallya? Okay. So, there are the fraud or even the credit that was incurred was somewhere close to 10,000 crores. Yes, there was a credit. He was supposed to, like there are multiple banks that he was supposed to give money to, right? At one point of time when that reached 10,000 crores, that's when they realized, Acha, now we have to stop. What was till then? What happened till then? Why was the system failed until that 10,000, right? There are 3 prominent banks which failed, like if I'm talking about PNB, SBI, like 2 primary ones who actually suffered a loss. And there are other banks also, but why did the system fail there, right? Because of the lack of control, or even not, I'm not just referring to the control, but because of some of those areas where we did not even look at it, right? That's a very area or gray area, right? So that's the reason, then just followed by that single case. This happened in 2016, right? So let's go a couple of years from there, right? What happened to PNB, Punjab National Bank, right? It has around a fraud of 140 billion rupees, right? So, but somehow they recovered through their NPAs, assets, this and that, and still they were in a loss of 1,600 crores. Big money, right? So when we are talking about these and you are losing the money, you are not able to sustain your business. Now at some point of time, you say, your banks are also, till today, I know SBI is one of the biggest bank, but the number of frauds and the losses that happened is SBI only, right? I know the other banks are, like SBI is too big to fail, okay? But if you are referring to other banks, they have still incurred the loss, but somehow they couldn't sustain. Now their interest rates have substantially increased. They are not able to match up to the market, right? So those are the areas where, your operations fail, your strategies fail. At some point of time, your controls fail, and you get too much exposed to the risk, right? So basic concept I'm just covering so that we know once we actually start talking about some of the examples, we know what are we relating to, right? Fair enough? Good to go? Yes? Let's move ahead. Let's go to the next. Achha, this is one other important concept that I want to talk about is risk reward trade-off. This is mainly, it's a balancing rewards, right? So here, if there is a outcome that you get out of the risk that's taken, you spoke about a little bit when sir was talking about startups, right? Risk and reward ratio, right? So I'll not dive into details for these, but at some point of time, there is a concept called sustainable risk. Heard about it, right? So if you know there is a risk and what risk appetite can I absorb today, that sustainable risk, if you know, that's understood. If I'm going beyond that, it's something that I start failing, correct? And how to get that balance, right? There's somewhere around those where is like you try to start incentivizing or just a sense to balance it, right? You start incentivizing, then you've had some sort of risk-reward trade-offs, then you have performance metrics defined, like how based on how this is performing, you kind of get some rewards around this, right? So these are some of the areas, like if there's a lot of calculation that's involved even to get to these numbers at some point of time, right? But if we need to know, when we are at a positive outcome and the risk is defined, we need to know what balance we need to maintain. At some point of time, if you just lose that balance, things start falling down. I mean, it applies to your business or even the strategies that you have put in place, even within the business units also, right? So that's what this slide just talks about. Any questions on this slide? Let's move, because we will not come back on this slide. Let's move. This is a little important. I'll just spend a couple of minutes on this. Everybody is aware about business continuity planning, right? Business continuity planning, crisis management. And when I say how do we talk about business continuity, we just directly talk about the recent pandemic that we had or any other situations that we had, floods or the other external issues, right? But this is again, how much can you fall back is something that would define the way how strong your business is, okay? So one aspect is business continuity planning. Have those enough planning in place? Talk about your crisis management and so on, right? So I would relate this to some of our technology investments or transformation businesses. Once we go there, I'll directly relate it to some of these concepts there, right? So that's the reason I'm just covering it individually. I would go to directly resiliency testing. Well, cyber incident response, we directly know, right? I'll not speak more on this. Resiliency testing is, let me give an example. Previously, there was a method of, there are several technology products that are built, but what is happening, let's say technology to chhod do. Let's come back to manufacturing a car, right? Let's say previously how it was, pehle engine ban gaya, then you build a body and everything, the entire product, it put it for testing, right? At some point of time, let's say if it fails, the entire process is failed. Now, let's bring it back to the agile methodology. What agile says today is you build one concept, let's say you build an engine, put it for the test, right? And then once you're done with it, then you move to a next product. So similarly, when we are looking at the technology aspects today, it's the same. You build some part of the product, then you put it for testing, and then now they move to the next part of the product. Until then, you do not, right? And we are very fastly transforming from that phase to agile phase, right? So previously, whatever you call it as now, waterfall method you call it as, or any other methods you want to call, right? But this concept not just applies to the technology, but also in terms of how are you balancing it, or when you actually fall back, for example, like I have something called stop loss, right? You know, I can't go beyond this. This is my stop loss in case you have, you know, the market is going down, right? Similarly, resilience is something that talks about when you try to put something new or invest in something new, you cannot fall or go beyond certain percentage. That's what it defines. Okay. Let's move to the next one. This is one thing I want to talk about is real-time data. We know predictive analytics. Predictive analytics is something which is directly related to AI. This is AI, right? This is what I primarily do when we try to build some kind of predictive analysis based on your historical information or based on some of the data, direct or indirect data, and you build some percentage over a period of time. You cannot have any predictions with 3 months data, 4 months data, not possible. So you at least need 12 months, year and a half or 18 months, then you will say, okay, now I can build something based on this because I have understood the pattern. So predictive analysis will work in terms of, you know, some of the technology aspects that you have currently. We have lot of tools within AI, machine learning and data science that would actually tell you more than 70-80% of prediction, how would this move from what it is today, right? So that is what we use today as well for predictive analysis. That's one of the method that primarily used for any sort of data analytics or any sort of decision making. Okay, so it's very important. We'll talk a little bit about it in some of the slides further. And then communication platforms where you know, share the updates, how business is performing, and again in terms of, you know, this is our stability and so on. You spend some time in talking about those communication platforms. I just mentioned it because just for you to know the concept. Okay, let's move ahead. Yes, everybody is aware about SEC, Security Exchange Commission, right? किसी को नहीं पता what is Security Exchange Commission. So SEC kind of gives you a guideline. Can I operate in this country today, or can I operate in any other country, or do we have that doesn't just define, like, you know, we have SEBI, right, and we have SEC also. At some point of time, let's say if we are talking about any of the companies operating in the business, MNC operating in Pune, for example, or India for that matter, right? So they would see, are there enough competencies to do that level of job, right? We have financial transactions done. We have some kind of business model to be built. We have some kind of you know, technology solutions to be provided. But do we have enough competencies of the people? One, do we have enough infrastructure? Two, right? And do we have equal social support or even the political support for us to operate? Then SEC says, okay, now you can do the business in India, right? With me so far? Yes, right? So now you can do the business in India. After that, what happens is, now at some point of time, they say, okay, you cannot do because of your competencies are not there, or at some point of time, the guidelines are not very clear. Then there are certain broader guidelines that SEBI also defines. And when we actually get into those, we spend some time in explaining all of those risk, finance, strategic planning, leadership and communication, so that we could define our competencies and say that when we are not ready to operate in a particular country or a sector or a business for that matter, right? So there is one very interesting case study that we have is CCM, clearance and collateral management. So I spent some time in understanding it. It's moreover about talks about how those governing bodies help for them to start operating in the particular countries. Like today, India is one, Poland is one, Russia is one, where the companies have been like struggling to get into it. But today India is doing good, right? We have a lot of MNCs, a lot of finance companies that are in place. Poland is doing okay. Russia is still struggling, right? But that's because of this competencies not being so very effective or prominent in those particular countries. Okay, let's move to the next slide. All right, when we talk about artificial intelligence or automations, right, there are certain areas where we need to understand what level of accuracy do we have from that product. So everybody understands how AI works today, थोड़ा बहुत, है ना? So now, for example, let me take an example of a response that AI is giving you today, right? I'm not just talking about your social media responses. Let's say there are responses that you have your caller response. If you take a recent example that you call if you have an HDFC customer service, right? You call there. Most of those responses are provided through IVR only. But just go a couple of years back. Those responses are not through IVR. You would have somebody sitting there and getting you those queries answered, right? But you just moved from couple of years only, right? And now around 50 to 60% are solved through IVR. You want to know balance, you press 1, balance aa gaya. You want to know what your last 5 transactions, wo aa gaya. But usse pehle there was some agent sitting there and giving you last 5 transactions, right? And why? Because there was an AI model that was built and trained enough so that it could give you accuracy response. So what if your AI model is not robust and it says, okay, give me last 5 transactions, it's giving you first 5 transactions, correct? Because you've not trained your model well. Right? That's when it says if you are talking about recent trends to AI to be implemented or any of the tools to be implemented, if you have not trained enough, it's very high risk. And when I say high risk, it's not just about a risk of getting you a wrong data. It's about the inference of data is incorrect. It's about getting you in, and when I'm talking about finance domain, it's about getting these information even towards your customers or even to the third parties are incorrect. And then even the following information would flow in, not so accurate. So now what happens at this point of time, if I directly relate it to some of the trading industries, right? What we did recently was, there are bots in place. What this bot did was, they would place a very simple trades, right? You want to make a purchase into a XYZ fund, right? Very simple bot. You will put some instructions, where fund number ye hai, this is my account number, from there the money would be debited, you have your authentication done, bot will do transactions for you, right? Imagine that bot is not very effective, where it's not gone through the proper training, and now you say, I want to invest $100, and that bot would invest $10,000 for you. Your account is gone with 10,000 first, dhadal karke, right? Now you have correction measures. Firstly, you made an error. Now you want to go through correction measures. Now what happens through the correction measures? You will go next day and somebody will realize somewhere after a couple of days that mera to $100 invest hona tha, $10,000 invest ho gaya. Now what to do, right? Somebody will understand after 4 days and they say, my investment should have been as of today's date, but I figured it out 5 days later, correct? As of 22nd February, my investment should be there and it could be like 50 cents per unit and I've invested $100. Now 50 cents ka cost has gone to 75 cents after 3 days when you figured it out. So the difference that you kind of provide today is actually a loss to the company. And why did this happen? Is because of the way the robust process is not there. Your robust tools, the tools are not very effective, so that would give you accurate even trade supports, right? So that's about AI and how we want to train those models. There is little bit of recent trends that we have mentioned here is remote work, sustainable finance and cyber security. So these are moreover about thoda moda concepts that we have. But what I would more emphasize on is if you are leveraging AI or any of the tools within data science, like today if I talk about machine learning, right? I have 13 algorithms to be written on machine learning. But am I ready to implement all 13? No. Do I know what 13 they are? No. Are all 13 relevant to me? No. There could be 1 or 2 very much relevant to something that I have to use it here, right? So that study is required for you to know, so that one fine day you can implement it and get that product effective and be relevant to the market. Very important, right? So let's move it. Let's talk about some piece of yeah, these are examples. So there's an interesting fact, right? When I was doing some research in terms of what are AI and AI tools that are done that are used here, right? So I was doing some research and I was looking for some companies specifically, like where I can use as an example here, right? There's another interesting fact. So can I share an instance with you? Just thoda sa side track, hai na? So let's come back. So what I was doing was I was just getting through the instance. There was my laptop pe pop-up aa gaya, and that pop-up was like top leading EV companies, top leading EV company investing today and good to invest or something like that. That was a very catchy statement that came up in a video. Some podcast का एक suggestion आ गया. So I picked it up. Like, I was doing this research, so that pop-up आ गया तो side track हो गया मैं. चलो पहले we'll check this. So I went there and I started going through that video. I thought I'll get a couple of company names, I'll use it and thoda bahut it'll help me to do that. I went through the video, 22 minutes ka video. I spent some time, I went through that video, then I saw, acha, this is talking about EV market today. Acha, this is on a couple of products are in place. Then he spoke about everything. Then I said, I want to know, like, what are those who are actually doing good in EV today? End mein jata hai, and that person says, there are two very prominent EV businesses and companies in India and doing really great. नाम नहीं बोलूँगा, Google करके देख लेना. Yeah, उसी के लिए तो बैठा था end तक, you know. So those are very misleading, and I would never want to trust any podcast or anything or do any kind of research. I would say just raise your sleeves, put your hands dirty, start reading through some of the books and you know, if there are any blogs, I would really suggest, but never go to you know, those podcasts and everything. Okay, so this was a very crazy instance. I would probably talk about a little bit of utilizing for AI for funds NAV and identifying platforms and deviations, right? Identifying platforms, patterns and deviations. So NAV is defined at the end of the business, right? And it doesn't just happen in formula B apne paas, very simple formula. So when these calculations are done, this is not just done by one or two trades, right? And we are talking about millions of trades that are receivable, received, cash in hand, ये सब calculate होके, then you get to certain NAV value, right? At some point of time, there are some of the amounts that are not realized also, outstanding, still not on your books, right? The money is still, like you have requested the money to be received and they have not come. And there are some of the trades that are, let's say, T+1, T+2 trades. We still not realized, right? You have not even used the best possible method to utilize for estimates also. That's when the AI tool will help you to understand, okay, you have placed a trade yesterday and you're supposed to receive T+1 sum of those, let's say $50,000 today, right? If you do not have a tool like this, what it to do? Like you have to put somewhere a spreadsheet में डाल के बैठना पड़ेगा, notepad लेके you have to sit somewhere, right? So that you know my T+1 is settling today, a trade, for example, right? But a tool like this will eventually help you to estimate that amount also. A tool like this will also tell you what are your receivables, what are your payables, and that's when you need to define NAV, and that's much more accurate than any other tool if you want to use it manually. Like you might have the best spreadsheet ever, but will not help you here, right? So that's how one of the tools, this has actually helped today in one of the today's finance industries, primarily the mutual fund services, right? Leveraging AI for client responses and inquiries, I just gave an example of HDFC, right? So it actually had how do we respond to those clients. Heard about chatbots, right? Heard about chatbots. So recently, the company that I work for, so we built a chatbot where, and I had to design the conversation also. When I say conversation, let's say if you say hi, I should respond hello. And then you say like good morning, then I should respond good morning. So even like what should be your response, along with that what should be my response to the message sent by the customer. So we spent around 7 to 8 pages of conversation that are built and uploaded into the system, right? And this is chatbot. Chatbot is where you ask for a query, this should be my response, and it should take you to page ABC. Then if you have a query related to your account details, this should be the response, it should take you to account details information, right? So we built that chatbot. At one point what happened, customer is greedy, very greedy, right? So now when you give them some tool, you say you don't have to navigate into the portal. Just say everybody uses net banking, right? People have used net banking before, right? So let's just try to replicate the net banking concept. So you know where to find your fund value, you should find your history, account history, statements and so on, right? So similarly, chatbot will tell you account history, click here, I'll take you there. Fund value, click here, I'll take you there. Very simple, layman terms, right? So now the customer is very greedy. Now customer came back and says, I don't want to click on account and go there. Give me account statement in the chat box only. Another level of investment I have to get into, right? So now we started solutioning those, and then firstly we started understanding is, do we have anybody doing this? or is it just we are going with the flow? Our customer says dena hai to dena hai, right? So we realized that there are certain kind of services that are in place, and then we had to invest, we had to stay relevant, we had to stay in the market. Then we started brainstorming on those, how can we solution to these kind of requests. It's like, acha meko statement chahiye, so I should be able to provide the statement. Acha meko fund balance chahiye, I don't want to ask him or her to go to the fund page and find the balance. That should be actually populated on a chat box, right? So we had to build that level of efficient chat box so that the customer is actually there and we are providing provide the best solutions to the customers. Okay, so that's how you would want to have customer response, customer inquiries taken care, and AI is one of the tools that has actually helped us. There is a risk also. What is the risk here? Anybody wants to say what is the risk when I'm using a chatbot like this and providing the response? Very, very common risk, but that's actually there. What's the risk here? Data privacy, yes, but what like one risk that would be very, very, very scary about? And we've been facing this almost every week. We face this risk. Data privacy understood, right? Like very close to that only. Heard about identity theft, correct? Or let's say I know your authentication details, right? Now if I take your authentication details and try to access your account, I can get your statements and everything, because now I know how to authenticate and get there, right? And we had to build some of the tool that could not just crack the identity threat, but also get to certain kind of validation to know that's you only today, right? We cannot just say you answer to एक OTP provide करो, एक password डाल दो, खत्म हो गया. We go through 3 to 4 level of authentication. That's when the customer gets in there. It's only because there were several fraud instances that have happened before. Every instance is a learning to us. Okay, so we built that tool. Today we are one of the leading provider of such tools in the industry, and that could only happen because the customer is feeling secured. They are feeling that मेरा data किसी और को नहीं जाएगा, because except me nobody can access it. Nobody can answer 4 different types of questions that easily, and nobody can get it right every single time, right? So that's about providing response to customers. Yeah, I think everybody has read this, right? JP Morgan using AI to detect fraud. So that is one company that has started fraud detection today, and probably the pioneer of building some kind of tool like that, and gradually everybody is following it. But that case study is really amazing. So if you get time, I would encourage you to read. This is actually the subject of the case study. So if you read through that, right, it will tell you how did they started detecting fraud and eliminate them also, right? Investment using AI detects suspicious trades. ये तो AML compliances. This is every company is using it now. But one other thing is BlackRock's Aladdin platform used to analyze and optimize risk. This is in place right now, also leveraged by other companies. Like they would be given as a license-based tools. But this is again started by themselves. That's when they started, and now they heard about Bloomberg. है ना? Bloomberg, like you can use Bloomberg as a license, or you can use you can just use as a user. But if you want to use Bloomberg as a platform also, that's another expense and another contract altogether, right? Similarly, this is one of the tools from BlackRock that is in place, and this is again I would probably suggest you to read through. It'll actually tell you what level of risk that is in place and how do you actually identify it and get that measures also calculated. Okay, so these are some of the examples that are there using AI in finance. We can move to the next one. All right, so this is digital technology transforming finance. I just spoke to you about some of the concepts before, है ना? So now with these concepts, what we will try to know is how can we use these as a part of tools, and can that help us, or what would be a possibility of failure, what could be a possibility of success ratio for us, right? We'll talk a little bit about it in terms of digital technology transforming finance, right? Let's move on. Yes, this is not a new term to everybody, है ना? What are blockchains and cryptocurrencies? What are blockchains? Anybody wants to answer? You want to answer what are blockchains? Yeah, because you just woke up. I saw you. Okay, fair enough. Anybody wants to say what are blockchains? Yes? Somebody say that. A connective database, sort of, yes. Any other answers? Decentralized stored ledger. Yeah, I mean, ledger is the word, actually, that's a keyword when you say blockchain, right? Any other answers? Okay, okay. So, what are you explaining is the ERP process, enterprise, enterprise resource process. So, ledger is actually a keyword when you actually blockchain, when you talk about it. So, what happens is, when you are connecting, we all know cloud platforms, right? So, there are cloud platforms that are available to us to operate. Now, all the companies are giving it to us, right? So, here we would want to use those platforms and get maximum output by connecting these resources, and that too very limited data availability for us, right? Let's say I gave you an example of AML thoda time pehle, anti-money laundering ke liye, right? So user data is available everywhere. Aapka name se leke, age se leke, your investments, your history and investment history, your holdings, everything is available, right? But when you as a unit, business unit comes to us as a, let's say I'm an AML, and you come to me with a certain data, I'm not giving you entire ERP, jao leke jao, right? I would say, you would, what is that you need for? You would say, okay, I want to validate whether this customer is actually has got his KYC norms complete, so that, you know, does he actually holding that minimum, so that we can give him percentage benefit and so on, right? So we would give only that information to the business unit, so that business unit would certainly validate later, and then they would probably do the business with the customers, right? But AML has a lot of control to provide this level of data, okay? So where I'm coming from is eventually having this data on the cloud platform, but that doesn't mean everything is available to everybody, correct? So some of these is something where you know, it plays important role. The other piece is cryptocurrencies. Cryptocurrencies we all know, right? What is the recent fraud that happened on the cryptocurrencies? Anybody wants to talk about? Or just give me the name of the... Sorry? Huh? Vajirex, Vajirex. And heard about, that's one. FTX, right? So this is one of the fraud. So, anybody? Correct, yeah, yes. So that's like Vajirex, FTX, and this is one of those, right? So that is, these are recent frauds. Are they regulated? Are the cryptos regulated today? Anybody who is available? Yes, no, don't know. Cryptos are not regulated, right? So when they are not regulated, you can still perform investments through your accounts or whatever. Today we have Grow app or different apps. You can still perform investments. Why can you still perform investment? Government should eventually ban those products, right? No, it's not regulated. Upar se there are frauds. Plus there are other investments that we have, but still they are allowed to operate in certain markets. Why? Anybody? Okay. So since if it's not regulated, but still there are controls, there are certain guidelines they operate under. That is the reason they are still available for us to invest. If they are not following those controls and guidelines also, then they would be out of the trading aspects as well. Okay. So when if I spend some time talking about these controls, like it will be another 2-3 slides, right? But they have to follow certain guidelines before they are even eligible for investments. Okay. So what are impact of cryptos and opportunity and challenges, there are other things. So these are something which are one of the areas where today technology and also these are tools and these investment opportunities are driving very high risk and very high scope of fraud for anybody to, like there is one fraud that is recently happening widely, and if I talk about retail banks in India, SBI, right, in the year 2019-20, 185,000 frauds were detected just for SBI. Forget about other banks, right? Just for SBI, 185,000 frauds were detected, right? Some of them could be identity theft, some of them could be account takeover theft, and so on. So why these are actually frauds still happening, and they are increasing with time. Like entire fraud list for the year 2024 were around 60,000 plus. 60,000 plus across the banks. A lot, right? Somebody is holding an investment. Why they are? And today, what are we doing to even control those? These are the tools and technology. I mean, not this one, but when I'm talking about AI and other products that we have, right? They are helping us to control and exclude. At some point of time, I think if you have a actual effective product, I think you don't even get to those level of frauds or even identifying of those frauds, right? Because your system is built so strong. Okay, so let's move to the next one. These are just the products that we have. Okay, we spend a lot of time in these two tools, right? मेरा सुबह शाम इसी में चला जाता है, artificial intelligence, machine learning, and data science, right? So because when we spend some time, we get a problem, right? I'll just give you a scenario. Generally, eventually, once you get placed and when you choose to be taking something role of similar to like this, right? I'll give you a scenario. Those kind of situations are given to us today, like every year or every fortnight or quarter or something, right? Let's say there is a problem and they want to, let's say company wants to reduce your headcount from 500 to 200. Okay, company wants to reduce your headcount from 500 to 200. Headcount in the sense, the people investing in people and operating cost should be reduced from 500 people to 200 people. And now we only have, let's say, $250,000 to reduce from 500 to 200. So you have to, with the help of $250,000, you want to reduce your 300 headcounts, right? How will you get to that? That's your headache. Then it will be given to you. Then what would you? This is all I have as a sort of my inputs. Then I would be spending time in terms of what would be the immediate solution. We closely work with the business. Then we start spending some time with other operations. Then we start seeing what are those wastage that we can have, right? So we'll talk about that also in the next one, which is like talks about robotics, RPOs. Then we spend some time and identify, okay, where can I use my $250,000 so that I can get benefit of 300 headcount, right? So that's when some of the tools are more effective. So we can't just implement the tools directly, right? So this is what it talks about. Enhanced data analytics, where you are not just talking about the current data, you are also referring to some of the historical information. You build some inferences, you train the model, and then you say, okay, based on that, I have come to a certain conclusion of making decisions to reduce number of time taken from 20 minutes to 10 minutes to do a certain kind of activity, right? So that's based on enhanced data analytics. Then personalized customer service, I recently spoke about it, so I would probably skip that. And then automation of tasks. This is again very simple tool, but very effective for everybody. Okay, you remember? I don't know. When 4 to 5 years before, those who were holding credit cards, end of the month, everybody used to receive credit card statement, paper statement. Yes. Now let's talk about Maharashtra. So within Maharashtra, MSEB used to send your bill to your home every month, whether you stay there or you don't stay there. MSEB used to send every month, right? So I'm just giving an example of paperwork that's happening, a lot of paperwork. So there is again certain changes that have happened in the. This is very basic example I gave you right now. But if you just directly switch from there to banks or retail businesses, right, where lot of work that are done through paper are directly switching digital, Not because like digital India because Modi said, right? It's because of the cost that is reducing today. The impact of, like if a bank is spending around 50 rupees to service one customer per day, then that 50 rupees is reduced from 50 to 10 rupees. They would definitely invest in tools like this, right? They would enhance your app, make your app easily accessible, make a lot of options available for your mobile app, net banking and so on. That is automation of task, right? And make some of the tasks make available for you. Sometimes you receive your day-end balances on your mobile only, so you don't have to go and start spending time on your app. Sometimes you receive your quarterly statements on your email ID only, so you don't have to again go back to the tools and get it, right? And sometimes you can self-service also. So that's about automation of tasks. Okay, let's move to the next one. This is about RPA. I just mentioned as an example when I was just mentioning previously, right? So repetitive task cost reduction, lean concept aa jata hai isme when we talk about RPA. So why we do this is, like, there is a obscene amount of investment that is there today, not just for AI, but also something like RPA to be established in the company so that your wastage are gone. You could minimalize, with minimum efforts you get maximum output, right? So that's what it talks about. And I just wanted you to emphasize, when we talk about risk, this is something where want to exclude or try to evade manual errors, human errors, right? If my system is doing it, I'm sure it would be doing 100% correct. यहाँ से data उठाएगा, यहाँ पे डालेगा. But if I ask somebody to do it, या तो बीवी से झगड़ा करके आया रहेगा वो, यहाँ से उठा डालने को, या कुछ और करके आएगा, या भी breakup हुआ रहेगा. So यहाँ से उठा के डेटा यहाँ डालने से पहले कहीं और डाल दे. So right, it would be a very human errors, right? So I would exclude those kind of manual efforts which are like mundane, and then implement some tools like this, right? So this is being, there is a lot of investment that's happening here. So if anybody gets a chance to learn, study, understand what is RPA, take it up, irrespective of whatever you want to do after this. But I would strongly suggest RPA, even data science tools, several they are, right? Just spend some time in learning and understanding them. We can move to the next one. Future prospects and challenges, right? I think we just are down with a couple of slides, right? So these are future prospects and challenges. I actually wanted to place here so that we know where are we heading with all that we spoke so far, right? Where we would be heading it, right? Emerging trends and innovations. So digital wallets, you all know. Open banking, I just gave an example of open banking, right? Where you have so many tools, apps, net banking and so on. Like now people are very less option where I don't remember when was the last time I took my checkbook and withdrawal slip and went to the bank. I don't even remember, right? So this is just a retail banking example I'm giving you. But similarly, if the securities markets have also grown really high, heard about Grow app, and today there are several apps that would help you to invest in mutual funds in a single app. Invest into mutual funds also, securities also, help you to invest into cryptocurrencies as well, right? Single app, single solution, one solution at single click, right? So this is what is happening as a sort of emerging trend. But what this is triggering today is very high risk, right? I was just talking about some time before, like during the interview, right? Whenever I am here, I had on my location. If I move from here to other location or somewhere else, right, my mobile location is still on. Where is that data going? It doesn't just sit there, right? That is being used today. So equally, having exposed to several tools or having exposed to several convenience for us, we are also getting ourselves exposed to a lot of risk. This is something to be used very wisely. And recently Facebook has faced a lot of issues here, right? Facebook tools. So पहले Facebook आके बोला गलती से data leak हो गया, and then Facebook came back and said कि अरे नहीं government को हमको data दे दिया. Just so many things that happened at some point of time. We still into dilemma कि हमारा data कहाँ जाता है? You make a transaction in DMart today, next day call आ जाता है. How is this happening? Right? Next day customer care का call आता है. So these are very sensitive. Like I would be very the moment when we start reading this, I would be very particular about using any of the tools unless it's actually needed. Okay, so there's also like pros and cons when we see tools like this. Potential challenges and risk factors. Regulatory hurdles, I spoke about ACC, SEBIs and all, right? If you're not competent enough, you cannot operate in certain areas, right? And cyber security threats I just spoke about, right? There would be a very high possibility of you getting exposed to cyber securities because of now so much of data is available. I also know what you make, what level of money you make. I know what's your net worth. At some point of time, I can figure out how can I get into your assets, right? This is very, and I keep personally, I keep seeing this. There are several attempts of somebody trying to take over one or the other accounts every second day, right? And then technological upgrades, right? So technological upgrades is not about investing in technology. Do you actually need it today, right? That's one thing that companies are closely knowing, and I would probably emphasize on this a little, because just because my neighboring company or a similar immediate competitor is doing it, not necessarily I should also be doing it. Then the sustainability, and for me to have that technology maintained is another cost, right? Just to get rid of one headache, I would be inviting another level of headache just to maintain this level of technologies, right? So this is also has its own pros and cons, right? But these are, again, I would consider as a challenge for you to, do you actually need it? If you need it, yes. If you don't need it, I think it's about just having it at a sustainable investments only. Okay? That's about potential challenges and risks. All right, so that talks about overall. So within the digital transformation businesses, how are we today placed, right? Based when we talk about risk or resilience on rewards and so on. So I'm open for questions. Anything anybody would want to ask?
The floor is now open for question and answers.
Anybody? Yes. Yeah. Right. So let me give you an example, right? When these tools are created, or even the computers are made, right? When they were made, when computers were introduced, did the scope for jobs increase or reduced? Increased, right? So when we have some talking about AI, so there are two ways also, right? If you are, I spoke about change will change you. You have to get there. So if you are not relevant to the growth today, relevant to the market today, eventually you will be impacted. It's not that there will be too much of security, right? But if you are with it, right, and you would be probably still servicing something else because you are with the market, but it's just reducing, let's say 500 to 1000 for that business. That doesn't mean that's still getting you a scope of getting more work, because now I have 300 more people for me to work, but I have a lot of scope to get similar kind of work for me to cover, right? So I would have, let's say I would utilize another 200 from that lot, utilize 400 people to do more work than what I was previously doing with a lot of 500 people, right? So that is how technology is looking at it today for AI. Scale be relevant to the change, and at some point of time I would not say directly that just for technology perspective. It's also, it has got both sides, right? At some, if company is trying to reduce the manual efforts, reduce the wastage, and work on reducing headcounts, that's not just because they want to get rid of the headcount. They want to get rid of something that they're doing things very manually, right? And they want to get rid of the scope that are happening, probably take care of the frauds, be relevant because the customers demands in a certain way, right? And your competitors are doing those kind of initiatives. So you also have to be relevant. So that's the reason where you see, okay, I'm relevant, I'm investing technology. investing there, but I also have to consider my headcount, because I'm investing, I can't invest in people also, right? So that time you see there is impact on heads. So yeah, thank you. Anything else? Thank you. Thank you, everyone.
Thank you, sir, for your insightful session.
All great events must come to an end, but the knowledge we have gained today will stay with us forever. To conclude the Finance Conclave 2025, I invite Soumya Singh ma'am to propose the vote of thanks.
Good evening, everyone. On behalf of Balaji Institute of International Business, I take immense pleasure in expressing my heartfelt gratitude to all our esteemed speakers, Hemal sir, Kavita ma'am, Mayank sir, and Chetan sir, for gracing Finance Conclave with their invaluable insights and expertise. Your words have sparked new ideas and broadened our horizons. Hemal sir's remark that bank may or may not be, but banking will remain, aptly captures shift of banking from just physical infrastructure into our mobile devices. This reflects the evolution of financial institutions over the years. And as we know, change is the only constant, and with change comes opportunities and risks. As Kavita ma'am rightly pointed out, opportunities, grabbing them at the right time, and utilizing the resources we have, be it cheap labor or the expertise we have in our domain, helps us grow and get through the successful ladders. Chetan sir further added value to our comprehension of risk, reward, and resilience through various industry examples. And Mayank sir, he has rightly helped us go through the investor's perspective on market valuation approaches. Overall, it has been a great learning experience. I would also like to thank Sri Balaji University's leadership team, Professor Chancellor Sir B. Parmanandan, Dr. G.K. Shirude Sir, Dr. Dimple Saini Ma'am, Dr. Rashmi Mahajan Ma'am, and Dr. Biju Pillai Sir, for unwavering support in organizing this conclave. Lastly, a big thank you to all the attendees for enthusiasm and participation. Thank you.
I now request Dr. Ushmita Gupta ma'am to kindly felicitate Dr. Mayank Patel sir by presenting memento as token of appreciation and gratitude.
I now request Professor Meenakshi Singh ma'am to kindly felicitate Mr. Chetan Kuknor sir by presenting memento as token of appreciation and gratitude. We extend our deepest gratitude to our esteemed speaker, faculty, and participants for making this event a resounding success.
On behalf of Sri Balaji University Pune, we thank you all and look forward to welcoming you again next year. Finance Conclave 2025 signing off.